Welcome everybody to our City Council meeting for May 11th, 2020. I'd like to go ahead and start with our Pledge of Allegiance. I pledge of allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. I'll go ahead and entertain a motion for the approval of tonight's agenda.
Councilmember Krogman, I so move.
Member Sullivan, I'll second.
Okay, any discussion? Hearing favor? If you'd like to go ahead and call the roll call, City Administrator Krugel, please.
Yes, I will. Councilmember Favalis,
Aye.
Councilmember Huntington,
Aye.
Councilmember Kirby,
Here, aye.
Councilmember Krogman,
Aye.
Councilmember Schleter,
Aye.
Councilmember Sullivan,
Aye.
and Mayor Hague.
Aye. Consent agenda. All items on the consent agenda are considered routine and have been made available to the City Council at least 2 days in advance of the meeting. The items will be enacted into one motion. There'll be no separate discussion of these items unless a council member or citizen so requests, in which event the item will be removed from the agenda and considered in normal sequence. On tonight's consent agenda, we have 2 items: our City Council meeting minutes for April 27th, 2020, and our disbursement approvals through May 11th, 2020. Is there any questions, concerns, thoughts, or ideas regarding tonight's consent agenda? Hearing none. Consent agenda.
This is Krogman, so move.
Thank you, sir. Can I get a second, please?
Councilmember Favalis, second.
Any additional discussion? Hearing none, City Administrator Krugel, if you'd please be kind enough to go ahead and do roll call for the vote.
Yep, this is for the approval of the consent agenda. Councilmember Favalis,
Aye.
Councilmember Huntington,
Aye.
Councilmember Kirby,
Aye.
Councilmember Krogman,
Aye.
Councilmember Schleter,
Aye.
Councilmember Sullivan,
Aye.
and Mayor Hague.
Aye. Okay, public comment. Public comment provides an opportunity for the public to address the council on items that are not on the agenda. Comments will be limited to 5 minutes per person. Persons wishing to make a comment must sign up in advance of the meeting on the sheet provided and identify themselves by providing a name and address. City Administrator Krugel, do we have anybody that's wishing to address City Council tonight for public comment?
Mayor Hague, we do. We have a resident, Sonny Wilson, who has requested to speak. Sonny, if you can hear me, I'm going to unmute you now, and we'll give you time to speak on this matter. And
Mr. Wilson, Mr. Wilson, this is Mayor Hague. Go ahead and address City Council, sir.
Thank you, council members. My name is Sonny Wilson. I live at 501 South 6th Street here in Sueur. Just short in order, I have presented a ordinance for the city here. I believe all you got a copy of it. As you look at it, I ask you just one simple question with each paragraph. Do you find those paragraphs true or untrue? Our city, along with its residents, are suffering under the Emergency Executive Order 2020, and I feel that we have found a way to free our residents from the financial burden that has been put upon them by not being able to open their businesses. Many counties and cities are taking a stand, asking for the governor to end its executive orders. I'm not even asking the city to do that. The city can remain to continue to follow the government's emergency executive order, being as they are also government. But I am asking the council to uphold the state's constitution in protecting small businesses and private citizens. And I would also ask if you could amend the agenda tonight so we could have further discussion on the city ordinance that I'm proposing. And that's all I have to say.
Okay, Mr. Wilson. In regards to amending tonight's agenda, I believe you received an email from our city administrator, Jasper Krugel, earlier this afternoon.
Yes, I have received emails from him, yes.
Okay, so what we propose is our city administrator, Mr. Krugel, and myself would like to meet with you sometime this week, whether it's virtual or in person, where we practice social distancing, and we can further discuss your proposed ordinance. Does that sound fair enough to you, sir?
I would greatly appreciate that, and I appreciate you meeting with me.
Okay, so what we'll do is I'll have City Administrator Krugel reach out to you, find out a convenient time for you, and then the three of us can sit down and go ahead and go through this with you. And we would like to go ahead and we'd like to make it a point of making sure that we thank you for bringing this to public comment to our city council and representing so many of the people within the city of Sueur. We also recognize the need that this is a huge problem for many people, including many of our businesses here in town. But that being said, we will not be amending our agenda tonight, and we will try to take care of this via conversation with you during the week, as long as you consent to that, sir.
Yes, sir, I appreciate that.
Okay. Thank you so much. Is there anybody else that would like to go ahead and ask Mr. Wilson any questions regarding the ordinance that he's presented tonight? Hearing none, I'll go ahead and entertain a motion to close public comment.
Councilmember Favalis, so moved.
Thank you, sir.
Sullivan, all second.
Thank you, sir. Is there any additional discussion? Hearing none, if City Administrator Krug will call a roll call, please, to close public comment.
Yes, Councilmember Favalis? Councilmember Favalis?
Aye.
All right. Councilmember Huntington?
Aye.
Councilmember Kirby?
Aye.
Councilmember Krogman?
Aye.
Councilmember Schlueter?
Aye.
Councilmember Sullivan?
Aye.
And Mayor Hague?
Aye. Thank you. We're now going to move on to our regular agenda. First item on the docket is 6 Alpha, the 2019 audit presentation and adoption. City Administrator Krugel.
Mayor Hague, members of City Council, this is an exercise that we're required to do annually. We are looking at this. We have a firm called Bergen, I can't remember, Bergen KDV. And if they've done the audit for us, I believe, for the last 4 years, if I'm correct, Zach. They'll let us know during the presentation, but it just goes through what our financial, what we did financially last year in 2019. We've discussed this at the personnel and budget. There are some areas that we need to work on this year, and we're confident that we can get us back into where we should be as far as our fund balance policy. We've had some expenditures in last year related to some emergency events that we hope to get reimbursed for this year. That should really help offset that fund balance policy deficiency that we have right now, along with some other things that we're going to enact this year. So with that, I'll turn it over to Matt Mayer, who is from Bergen KDV. We'll also have Zach Dowd, Finance Director, to answer any questions. Matt, I'll be just advancing the slides as you feel fit. If I get hung up, just mention something. Otherwise, I'll try to follow along.
Sounds good.
Mr. Mayor, my name is Gregory Hague. I'm the mayor of the city of Sueur. We welcome you and thank you for your time, sir, tonight to walk us through the audit.
Thank you, Mr. Mayor, members of the council. I appreciate the opportunity to present to you tonight. As Jasper indicated, we performed the audit recently to audit the city's financial presentation for the 2019 fiscal year required by the Office of the State Auditor. And we issued 3 reports associated with that, which we've summarized on the next slide. And the most important of those reports is our independent auditor's report. That is to provide you assurance on the financial statements that we'll be reviewing tonight. Our main objective as part of the audit is to be independent of the city and to test, examine, give an opinion on the numbers that the city finance team puts together. We want to thank Zach, the entire finance team at the city, for their work during this year's audit. A little different circumstances this year, working remotely through most of it, and they were very accommodating, very responsive to everything that we requested. We are giving you an unmodified opinion, which is the best we can give you on the numbers, and that means that the numbers we're going to be looking at are a true and accurate picture of the city's financial results and financial position at the end of 2019. There are 2 other reports under our letterhead in the documents that you received. One of them is a government auditing standards report. I'm on the second to last bullet here. And that's when we look at internal control, or your policies and procedures, how you do business at the city. And if we have any suggestions or critiques of that, we bring them out through this report. We had a couple, which I think you've seen in years past, regarding the utility billing process, and also lack of segregation of accounting duties. The billing process, I know you're making great strides on that. You made an investment as a city on a new system for that, and getting that up and running now. And then decisions in the future about the size of your accounting staff. Generally, in a small office environment, we're not going to get full segregation of accounting duties, but we'll critique and evaluate that with you each year. And if we feel there is cost benefit to that, we'll bring that up. At this point, we believe that there probably is not. It's just a matter of circumstances, and I will just remind you that we don't have a perfect environment every year. The final report is on legal compliance, and this has to do with all the statutes that apply to municipalities in the state of Minnesota, conflicts of interest, contracting and bidding, and the like. And again, if we have some issues there, we'll bring them up through this report. There were a couple of payments to vendors this year that were outside the 45-day statute period for payment, so just bring that to your attention. And also, as the city moves more toward electronic payments for both vendors and other purposes, that's perfectly fine according to statute, but they would like the council to establish an electronic payment policy. So we're recommending that administration come to you here in 2020 with such a policy, so it's clear as to the council's intentions regarding that electronic payment. There's not as good a paper trail sometimes with a lot of electronic payment, and so having a policy with some very strict procedures in place is allowed through statute to take that approach. So I think all in all, an excellent result for the audit when it comes to our reports. I'll take a few minutes just to go through some of the numbers with you, but again, our thanks to everyone at City Hall for their work in getting the reports out that we have tonight. And I think, again, good progress overall when it comes to your internal control and compliance at the city. So with my remaining time tonight, I want to take maybe about 5 or 10 minutes and just give you our perspective on the city's finances. And we're going to talk about 4 or 5 of your major funds. We're going to talk about the general fund, the community center fund, and then your utility funds, because those are the ones that the public interacts with the most. Those are the ones you as council members probably have the most input in as well. And again, giving you some perspective on where you landed with those and how we're seeing them, hopefully can give you some idea where you want to go in the future on these. The general fund is the main operating fund of the city. This is your police, your fire, your streets, your public works, your parks and rec, all go through the general fund. And to evaluate the success of this fund each year, we recommend you look at it in the context of your budget. As council members, you put together a budget each year that's approved in December. You approve a levy that goes along with that. And that budget is really a directive to administration on how the city should be run for the year. So to remind you what 2019 looked like, you had a balanced budget, $2.3 million in revenue, $2.8 million in spending, and then $552,000 in transfers in, the vast majority of that, about $500,000, coming from the electric fund to balance the budget for the year. So we would anticipate if the budget was executed to the dollar that we wouldn't see an increase or a decrease in your fund balance or your financial position. If we go on to the next screen, you'll see the actual results for the year. The actual revenue fell a little bit short of expectations. It was about $77,000 below expectations, about a 2 or 3% variance for the year that was spread out among some various categories. So nothing specific there to draw your attention to. Spending for the year, though, was over about 8 or 9%, about $277,000. And that fell across most of the departments, and we tried to kind of pick line items that we could draw your attention to, but it was a little bit here, a little bit there, and after everything was said and done, it added up to about that $277,000 number. So with revenue being short of expectations, spending being over, the fund balance actually declined for the year about $372,000 and took you down to a fund balance to end the year at $938,000. Now, that fund balance is best looked at as a percentage of your spending. And your policy at the city is to have a general fund balance that represents 40% or a minimum of 40% of your annual budget. And right now, after the 2019 performance, you fell to about 30% of your annual budget. So you have fallen outside of your fund balance policy. And as the city administrator indicated, we do recommend that you go to your personnel budget committee and have some discussions on how you're going to work back toward the policy that you as council members have established. You've got about $300,000 to get back to that 40% level. And then once you're there, again, just deciding on where you go when it comes to that. One caveat I want to give you and want to acknowledge with you along with this is that about 20% of your general fund inflows are coming from the electric fund, and that represents that $500,000 transfer in I was talking about. I'm going to talk about the health of the electric fund in just a little bit, but if we're going to see in just a little while that the electric fund actually has only about a $500,000 fund balance to end 2019 as well. So again, if this is a practice you plan on continuing, just be conscious of the fact that we are basically liquidating the reserves in the electric fund almost completely each year to enable you to make that transfer into the general fund. And I think we'll look at the electric fund, as I mentioned a little bit, to give you some perspective and some context on that. If we go to the next screen, you're going to see graphically just the history of the general fund. Revenue is in green, expenditures are in blue, and the fund balance is in purple. And a couple points I want to make here is that the purple line, you're going to see that your fund balance in real dollars has actually grown each of the last 4 years from 2015 to 2018. And only in 2019 did you have that deficit when it went down. But you want to be conscious of the fact that spending during that time ultimately also increased. And as a result, the percentage of fund balance in relation to spending actually went down despite the dollar value going up. So that orange line, you can see that has gone from about a 49% fund balance 5 years ago to the 30% that we're talking about right now. So it's kind of a two-part evaluation. You're going to evaluate the performance and the health of the general fund, number one, based on that fund balance, and have a target and a goal that you want to shoot for at the end of each year. And then you're going to put a budget together that's going to work toward that goal, and we're going to evaluate the performance or the health of that fund accordingly. So I'm going to jump ahead a couple of screens here, Jasper. We can skip that one, and let's just move ahead a couple more right to the community center fund. One more.
Mr. Mayor, before we start.
Yep, please go ahead.
Before we talk about the community center question, obviously you're aware of the fact that we had flood mitigation and we're waiting on FEMA reimbursement, which is a 12 to 18 month cycle.
Mm-hmm.
So, yeah, okay. Just wanted to bring that to your attention. I think you already knew that.
Mm-hmm. The community center fund, we can look at that. It's another fund that you budget for, and you can look at it in a similar way on how you performed in relation to your budget. The revenue for the year was budgeted at $1.3 million, expenditures for the year at $1.1 million, and then a transfer out of $184,000. And that transfer out is to cover the debt service on the bonds associated with the community center. So again, anticipating a balanced budget for the year in this particular fund, no change in fund balance would have been the goal for the year. If we go to the next slide, you're going to see the performance of the community center in relation to that budget. There we go. Oh, actually, go back one more. I think we skipped ahead one. There we go. Thank you, Jasper. Actual revenue for the year was about $1.1 million. That did fall a little bit short of your expectations of $134,000. So a little bit lower than anticipated. Spending for the year, again, was about $1.3 million, and that was about $200,000 over the budget that was established. So again, rather than a break-even budget or no change in fund balance, the fund balance declined this year about $335,000, and then it fell to a negative $606,000. So this one would be a fund that we do have some concern over. It began the year in deficit, about $250,000, $300,000 or so, and then fell further into deficit by about $606,000. Now you are levying already for this fund. This fund is receiving about $450,000 a year in levy dollars. And the deficit that you had this year from operations alone was $151,000. The hope would be, I think the plan would be, is that you're able to get a surplus from your operations. And then when you have a surplus in operations, you'll have sufficient dollars to transfer over for the debt service. Unfortunately, what's happening right now is that we have a deficit in operations in the community center fund, and the transfer that's needed to cover your debt service on the bonds is only exacerbating the issue. So as you look to your financial plans for 2020, this would be one fund that I would ask you to consider and to target. Again, we have that negative fund balance of $606,000. Maybe a challenge to absorb that through operations if operations continue to kind of trend at deficit. So trying to figure out how to not only absorb that deficit, but then hopefully build a fund balance so you have some reasonable reserves in this community center fund for future years and future generations. And the next slide, again, shows graphically, again, where things are going with this fund from a long-term or 5-year perspective. One concern is that you can see the green bar there, which is revenue, increasing each of the last 4 from 2015 to 2018, but falling off and trailing here in 2019, falling to about 1.1 million after topping out at 1.3 a year ago. You can see those deficits in the orange there each year. And the other point is that expenditures, while the revenues slacked off this year, expenditures in blue continue to increase each year with the inflationary increases in the operations in that particular fund. The fund balance, again, is represented by that purple line. And again, that is looking off to the right, looking at those numbers. So it has pretty much always been in deficit, but you were at least able to maintain a particular level. But the last couple of years, it's fallen further again, and we landed about a $600,000 deficit with the need for a plan to make that up in future years. To wrap up the presentation tonight, I'd just like to look through your utility funds with you. Go one more slide up. Good news on the water utility fund. This fund is performing well for you. You can see the revenue that has been coming into this fund, the growth in that revenue with the green bar, keeping expenses in check. And as a result of that, you have been able to post operating income very consistently each of the last 3 years, whether we include depreciation or we don't include depreciation. This fund at the end of the year has a reasonably strong fund balance, unrestricted net position of about $1.8 million to end the year. The sewer fund is the next one, and a little bit different story in this one. This had a very active year with MRPUC being merged into it. This fund, you've made some adjustments, and we look at the rate structure there and the expenses associated with running this particular fund. It's going to take a couple of years with the MRPUC operations now in there to give you some level of consistency. So it's going to be difficult to evaluate one year to the next year. But I do want you to be conscious of the fact that the unrestricted net position in this fund at the end of the year is almost opposite of where the water fund is. Where the water fund had almost a $2 million net position or fund balance, the sewer fund is actually in deficit by that same amount. So putting your two major utility funds together, you're basically back to break even. But the sewer fund does have a significant deficit, and it has been on the decline each of the last several years as well. The next one to take a quick look at is the electric fund. And again, this fund is pretty much run at a break-even level each of the last 5 years. You don't see significant operating losses or operating income in each of these years. But the transfer from the general fund that you relied on for general fund operations is starting to take a little bit of a toll in this particular fund. With $500,000 coming out of it each year, you can see that that fund balance has now fallen from about $1.4 million 5 years ago to only about a $500,000 fund balance here in 2019. And again, not raising the alarm bells or anything like that at this point, but just want you to be conscious of the fact if that is going to be a significant resource for your general fund in future years, want to make sure the health of this fund is sufficient to provide that resource for you moving forward. And then finally, to wrap things up, do we have one other? No, that's it. That was the last of the utility funds that we wanted to cover. So again, I appreciate the opportunity to work with the city. I know you're in very good hands with Zach and his team. We had a very good conversation with both Jasper and Zach a week or two ago and shared some of our thoughts a little bit more in depth. We've covered 5 or 6 of the city's funds here tonight. There's about 20 or 30 of them that are out there, and we've had good discussions on a lot of those last week. And again, appreciate the opportunity to give you our perspective and appreciate taking our message to the PBC committee to kind of plot strategy for future years. Be happy to stay on the line if you have some questions about the city's finances or the audit results or anything that I didn't cover in the actual presentation.
Fellow council members, does anybody have any questions for Mr. Mayor?
Mayor Hague, this is Member Sullivan.
Councilmember Sullivan?
I don't know if this question would be directed at you, Matt, or if it'd be directed at Zach, but when you referenced back at the beginning about the being out of 45-day range on payments, Zach, can you answer what was happening with that?
Yeah, so some of our invoices get held for specific reasons. They can be because we're waiting on product. It can be because they never sent us the invoice. So, we've kind of run into a few situations like that. But some of them just get caught up doing paperwork and stuff. So if they're sitting on a manager's desk to get approved because they are waiting on a product or whatever, and then it sits on their desk for too long and then doesn't get to a council meeting. There is 2 weeks between the council meetings. So we try to keep those and make payments at the council meetings and really try not to cut separate checks and stuff because it can get a little messy and things. So I know we've been working on this process. I know there was more in 2018 than there have been in 2019. And again, it's something that I'm focusing on in 2020 to make sure we're getting those payments paid in a much more timely fashion.
Perfect. Thank you.
Yep. Thank you for the question.
Anybody else? Well, on behalf of the entire Sueur City Council, we appreciate your time, Mr. Mayor. Thank you so much.
Thank you. I appreciate it, Mayor Hague.
Okay. I'll go ahead and entertain a motion to receive our 2019 financial audit performed by Bergen KDV.
So moved by Member Sullivan.
Thank you.
Second, it should be receive and accept, I believe, Mr. Mayor.
Okay, receive and accept. Thank you, sir. Okay. So we have a motion and we have a second. Is there any additional discussion? Hearing none, if City Administrator Krugel, will you please go ahead and call the roll for the vote, please? To accept
Yes, I will.
receive and accept.
Yes, I will. Councilmember Favolis,
Aye.
Councilmember Huntington,
Aye.
Councilmember Kirby,
Aye.
Councilmember Krogman,
Aye.
Councilmember Schleter,
Aye.
Councilmember Sullivan,
Aye.
Mayor Hague.
Aye. Thank you. We now move on to item 6 Bravo, which is our 2020 Q1 financial report. City Administrator Krugel.
Mayor Hague, members of City Council, tonight Zach Dowd, Finance Director, will be giving an update on our Q1, Q1 of 2020. One thing to note is that I think most of you are aware we don't receive a lot of our first half tax settlements until end of May, June time period. So a lot of those revenue projections you'll see on this for the general fund look pretty skewed to the point we don't have much for revenues coming in, which is true. And you know, we want to just make sure that we are anticipating to get our first half tax settlement, and we are anticipating getting our first half LGA, local government aid settlement as well here. So with those two things, I'll turn it over to Zach, and he can kind of go through what's going on.
Director Dowd, welcome back, sir.
Thank you very much, Mayor Hague and members of City Council, for allowing me to speak tonight. If you do have any questions, just kind of holler and I'll stop as I go along, just so we can answer them on this applicable slide. So we are going to start here. You know, thanks for taking the time for the audit presentation, Matt. That was fantastic for us to hear that before we got the Q1 financial report. I try to line these up as best as possible most of the time, just because we're already talking about finances, and it seems to make sense when we could talk about last year ending, and then what have we done since then in the beginning of the year. So there is normal operations for 2020. The 2020 number is in the yellow line, the furthest line down. So the reason why that line is so far down is, again, that $377,000 decrease in fund balance on the audit for the end of 2019 affects our beginning 2020 numbers and beyond. So if you move that line up, you know, that yellow line up $400,000, you're right in line with where we've been for operations at the city, you know, for the past 4 years. So it's not operations in 2020. There was just 2019 was a really tough year for us. Did a lot of things in the public safety area, public works area. We also had flood expenditures that we paid for, and they dropped that fund balance or that cash balance significantly. You know, $377,000. So it's something that staff is working on already with conversations with Matt and also working with the PBC. So we are already have things in place to make this turn around and get back to where we have been and increase our fund balance and further on in 2020 and beyond. So at this point, operations in 2020 are operating normally. It just looks lower because we're starting off lower in the beginning of the year. So that is what I have on that slide. If there are any questions, we can have those. Otherwise, next slide, please. All right, this is the general fund income statement. So this looks at revenues and expenditures for the year, Q1. And I take an annual budget here on the far left column. The numbers there, 770 and down. The column to the right of that is 1/4 or 1/4 of the annual budget. And I try to just divide those into quarters and then go through our actual numbers compared to those and make sure we talk about and discuss the items that are greater than $15,000 that are variances, whether that's up or down, and or vary from the budget 80%. Or less than 80% and greater than 120%. So the big things that we need to list on the revenue side and looking at those are the revenues are down based on taxes and grants. On the first half tax settlement, we always normally get the last week of May. In the past, with conversations with the county, nothing's going to change at this point. We're still expecting that payment in full. We haven't had any, like I said, with conversations, we haven't had any things that said it's going to be delayed or there's going to be short payments or whatever. So that's great for us. It keeps our operations moving forward, and should expect that in, like I said, end of May, beginning of June. And then our first half LGA, which is about $550,000 now, will be coming in July. They did not do a 14.6% cut of that LGA in May like they did last year. For some reason, the Congress of Minnesota decided that LGA needed to be cut in May of 2019. So we did receive like a 14.6% payment. I think that was to help some cash flow with some of the smaller cities within Minnesota. But they did that as a one-time thing, and they did not do that same thing in 2020. So we should expect to see that $550,000 amount in July. Otherwise, revenues, the other revenues, we never ever receive other revenues typically in the beginning of the year. These are normally reimbursements we get for, you know, if we do something for, you know, a organization, or we get some sort of donation money coming in. And those things normally don't happen in the beginning of the year. Typically those are over the summer months or in the fall months, especially when the fiscal year being with a lot of those businesses having towards the end of the year. They sometimes need to, you know, write things off or get rid of dump some money on something for a donation, and that's when we get those monies. So I'm not overall worried about those things, but it is something to keep in mind that we're not getting those other revenues yet. Although like I said, I don't foresee them not coming in. It's just timing on those. Expenditures, city administrator area. It's one of the big ones that looks, you know, way over budget because it's a $42,000 one. That $40,000 has to do with a one-time payment that we make for our PIMS software. It is our building permit software that we run. The $30,000 payment we make, and it's a one-time payment per year. So that's a timing thing. You know, that should level off as the year goes on. We also pay for other one-time things, dues and subscriptions, and other things like that that were one-time things that are always in Q1 of every year. So it always looks like it's way over budget, and it really is not. So those should level off as the year goes on. I'll touch base on the insurance as well, because that's the same thing. That's the bottom line, or the number 5 next to it in the white column there from the left, or from the right, second column over. It shows a little 5 there. It's insurance, and insurance we pay again one time a year. This has to do with work comp. So work comp payments one time a year. We pay that out, and then, you know, levels off over the year. But I'm budgeting on an annual basis, so it will get better as the year goes on. And the only other part of insurance that we have to pay for is our auto and liability insurance, which is like our buildings and all of our automobiles and vehicles that we have within the city. And that got paid in April of 2020. So you should see that on the second quarter report. Otherwise, the number 4, unallocated expenditures. This is a good one. It's under budget by $42,000. That is we always had a contingency at $100,000 every year, just in case, like those flood expenditures come up, and or if we have to do something that we don't expect to do in the general fund operations. Typically those can be in public works, public safety, you know, streets and parks, things like that we may need to do. So those are unallocated expenditures. We have not spent any of those this year. My hope and our steady staff goal is to spend as little of those as possible, to try to eat away at that $300,000 difference that we need to make up from 2019 operations. So those things are already in place to try to keep those unallocated expenditures at a minimum, and it seems to be working so far. Any questions on the general fund income statement at this point?
Expenditures for planning and zoning with the negative $13,207. Is there a particular reason why that wasn't footnoted?
Yeah, so that was it. Didn't meet the $15,000 variance number, but you know, I most certainly can explain that one. I have no problems explaining that one. That is related to consultant work. We've had quite a bit of work from our consultants in that area related to zoning things and other items of note in the planning and zoning area. I'm not sure if you are aware or note any of those, Jasper, that you know of right offhand.
Yeah, I do. So one of the major ones was a legal bill for a rental license dispute that was brought to city council. That was about $6,300, along with additional funds that were needed for that. So that basically is why that one's over. If you add up basically our planning work and our legal work that was related to that, we're at about $13,000. That's the biggest one. But yeah, that falls under consultants and legal.
Correct. Okay. I just wasn't sure what the exact project was, so thank you.
Okay.
Any other questions on the general fund overall? I said overall, it looks great. You know, we may be over in one area, city administrator, but we're under in unallocated expenditures, so we're operating right where we should be at this point. It always looks odd with the general fund because we never receive those tax dollars and those LGA dollars in a timely manner. It doesn't match up with our quarterly reports. So that can make it a little skewed, but everything's operating normally, and otherwise, besides 2019, we have plans in 2020, so I'm not overall too worried at this point.
Zach, this is Member Sullivan.
Yes, sir.
Hey, so back to that administrator one, so you said that's for PIM software?
Yes, that's our PIM software. So all of our softwares and all of our computer-related items run through a city administrator line called data processing expenses. And the reason why is we want to group all those together so we don't have to allocated across the different areas of the general fund, because all of them technically are running through the city administrator for him to be able to run reports and get information that he needs.
Perfect. You just answered my question. Thank you.
Yep, thank you.
Zach, this is Jasper. If I can add something too. In 2021, Zach and I are going to propose a separate fund, an IT related fund, data processing fund that like the general fund and all the utility funds pay into annually. And then all of our IT services, all of our hardware expenditures will get processed through that fund. It'll just help us track what we actually spend on IT services and hardware every year, and make it fair across the board. You know, that everybody's allocating the right amount of money to it. So that's something we're going to talk about during the 2021 budget process. It'll help us with some bookkeeping, and it just makes it more transparent as far as, you know, what are we spending on our IT services, because we have not only data processing expenditures in the general fund, but also in all of our utility funds.
Correct.
I think that's an excellent idea. Fantastic idea.
And Zach, I actually have one more question with that. Was that just due to timing? Will that level out over the year then?
Yep, so that's a one-time payment of $30,000. We did start doing it over time and over month to month, but they gave us a better discount just to pay it at one time, and we figured that was well worth it, to just have a one-time payment, and then we, you know, have to just level that off over the year for the budget.
Perfect.
Anybody else have any questions for our financial director? Please move on then, sir.
Okay, great questions. Thank you so much. Okay, this is the cash balance fund. Cash balances by fund. Again, Matt had mentioned that there was about 30 different funds that we have. That's pretty true. These are all of them. I know we concentrate in the general fund, which is the top blue line there. And then the bottom white line is the community center fund. So those are the two that we were really concentrating on. Otherwise, the reds in the middle are all, like I said, the bottom up are our utility funds up to the water fund there that starts with the 601. There's our water utility fund. We are looking back 1 year in the far left column in numbers. We look back and look at the end of the year and then say, here's where we're at, which is the middle column. Middle from the left will be the third over. Year to date changes from the end of the year, change from 331, and then the percentage change from the end of the year. And then what happens is the criteria that is set for these is anything that changes more than $50,000 from the end of the year and has a change greater than 20%. So if you have any other questions, most certainly, I can answer those as best I can. Otherwise, the main ones that I want to talk about are the ones that are numbered there 1 through 5. Number 1, the general fund struggled in 2019. We all talked about it enough. I'm not going to hammer it anymore, but it will return in 2020 with good operations from the staff. Number 2, creating the 324 fund. This is a brand new fund this year. That's why it looks, and there was not a balance on 331 of 19. That it's the middle. It's in the middle of the picture there on a blue line, and has a number 2 next to it. That's a new fund that we had to start based on GAAP purposes for the audit. That is our 2019 lease that we took out, and then that will be separated out from all of the other the lease dollars that come from the general fund. They were previously running through the 420 CIP fund as payments through there, but it was recommended by Matt and Matt's staff that we should create a new fund for those so that we're able to allocate those dollars specifically for the lease and not for anything else. So that was created during the audit, and that was a new fund that had to pop up because of GAAP purposes. Otherwise, number 3, the EDA, that decreased, and that's a good thing for decrease. I know it seems odd to have a decrease and it's good, but there was 9 new homes built in Sueur in 2019. The EDA and the city both said that they would waive the SAC and WAC charges for any 10 new homes that were put in 2019 and got building permits for. So we had 9 of those, which is a $27,000 decrease. And then also the remainder of that $68,000 decrease is just related to operations for the EDA. EDA had a lot of things going on with planning and consulting. Also had, some plans for getting some new developments in town that may or may not have fallen through. So the EDA is working their hardest to try to get some things going. 9 new homes is great in Sueur, and that's a fantastic thing to start with. We're looking forward to 2020 and seeing what we can do there. Otherwise, yes, sir.
Director Dowd, on item 3, the $6,500 for legal, is that the same is that the same $6,500 that was spent for the rental situation that we had earlier, or am I thinking of something different? Because I see this is related to EDA.
I believe that's the same thing. Is that not, City Administrator Krugel? I believe that's the same thing. I don't know if it's the same exact reason, but it may be the same exact person.
Yes, I believe that's correct.
Okay.
Okay. Why did we do that through EDA as opposed to doing it through our general fund, just out of curiosity?
I believe it was split, but I could be wrong on that one. From what I understood, it was split between the EDA and the city based on the license and the permit that was being requested. But that's based on my recollection of the idea.
If I may, this is Jasper. I can clarify this a little bit. So the dispute wasn't paid through the EDA. Mayor, if I could get some clarification, I'm not sure where you're seeing the $6,500.
On footnote 3 on page 4.
Okay.
Yeah, it's on the report, Jasper.
Okay. So I believe the legal fees were all paid for through the through the planning and zoning fund and the general fund, not the EDA. But I think that there were some consultant fees that were paid through the EDA for other things related to like the Kingsway development. And I'm trying to think what else they were working on, but there were some things like that that were in there.
Jasper, this
Okay.
is Marvin. I believe the other one was the 169 property.
Correct. Yep. The 169 property. There was quite a bit of work that was done up there by the EDA with surveying and planning expenses, things like that. Some legal
Yeah,
as well.
I think what we ended up what we just kind of assumed here was that when we saw that 6,500, we kind of realized that was similar to the rental situation, that was probably the same. But what you're saying is that's money spent for EDA specifically for the 169 property, Kingsway, and perhaps other things, but
Yes.
not the rental dispute.
Yeah.
Okay.
So I must have written that incorrectly and was thinking about two things at one time. So that's my bad, and I apologize about the error there. But
Greg,
It's okay. That's why we have these meetings, to make sure we're all on the same page.
Greg, it's Marvin. I think the confusion came in. It's the same consultant that did the rental property along with the 169 and the King property.
Yeah,
It's just separate projects.
yeah, Mr. Curry. Yep, gotcha. Okay, thank you.
yes, thank you. Good question. Let's talk quickly. I'm just going to run by the joint PUC Henderson. It's the third line from the bottom in the white. Listed number 4. That was combined with the sewer in 2020. That line item will go away completely in 2020, or in 2019. Sorry, it was combined with the sewer fund. That will go away completely in 2020. That's just a cleanup item that we will have, and it'll be a transfer memo that comes to council in order to clean that up. But the change from those two is the transfer that we approved back in October 28th of 2019 to fix where the dollars were being paid for. We were paying for MRF puck time out of there, and then we were reimbursing the sewer fund inappropriately. So we just had to recode some dollars there, which was fixed prior to the audit, which was great. So, and then the last one, 615 fund, number 5 listed there. 2020, we struggled in 2019, but staff's working on plans to move the cash balance in the right direction in 2020 and have been working with the PBC in order to make that happen.
Okay.
Any questions on the cash balances by fund? All right, we'll move to the next one. We'll work on the water fund now. So this is the water fund. I didn't put any explanations on here. I'll do my best to explain and go slowly. The water fund, the revenue number is a favorable variance of $17,000. That's a number 1 next to it there. We'll work on the left-hand side first, the income statement, which is the revenues and expenditures. This is based on increases in water rates. And also the usage is about the same from last year. Usage hasn't increased significantly in any one of the areas of water, whether it's commercial or residential. So it's mostly related to the increases in rates from 2019 to 2020. Number 2, bond principal. So this has to do with the capital lease payment that we have. That is a payment that is due on 1/1 of 2020 and beyond. So it'll be 1/1 of 2021 as well. We did not have this lease in 2019, so you're seeing a 0 in that actual through 3/31/2019 number, which is the third column from the left. So it doesn't line up with the 3/31 of 2020 and looks odd. But that will be the same moving forward because it's a 1/1 payment, and typically our bond payments are 6/1 and 12/1. This one just happens to be a different one because it's only a one-time a year payment. Otherwise, number 3, the payments for the water meters, which is a $56,000 difference in capital outlay from last year to this year. That has to do with payments for water meters and final payments for NISC, which is that new utility billing software that we implemented in February 10th of 2020 and went live with. And that all of those occurred in 2020, and that did not happen in 2019. There was nothing similar to that. So those were budgeted for and expected, but they happened in Q1 and did not happen in Q1 in 2019. Otherwise, I want to look at the little graph on the right there, a pretty little graph that shows our revenues and expenditures. This is something that I put together last year, and it seems to help a lot with looking at overall operations and how we're doing. If we're breaking even, making money, looking at depreciation as well. The goal for every fund is to be above the bar. Above the bar means that we're covering our depreciation or able to replace our assets once they are deplenished or gone. Typically, we put useful lives on everything, and if everything lasted its useful life, we would be in a perfect situation where we'd have enough money in order to buy the next item in order to replace that piece of equipment or water main or whatever it may be. And that's that blue kind of line you're looking at, a blue bar that's in the bar graph below. The orange part is the bond principal, which is actually a cash payment. So depreciation is not cash. We don't ever pay anybody for depreciation. There's no actual money that's left. But if we don't cover our depreciation, we will not have enough money in order to replace that asset if it only lasts its useful life. Now, useful lives are not perfect. If something lasts, we say it's going to last 5 years and it'll last 7, then we've got 2 extra years out of it and we didn't depreciate for that. And that's great. But typically useful lives are when we plan to replace that item. So bond principal is something we need to cover, really should look at covering, because otherwise our cash balance is going to decrease because we actually pay bond principal to a vendor. And then orange is our current expenditures. That's all of our salaries. That's all of our expenses to operate the fund overall. And any of our transfers that happen are current expenditures. So in this water fund here, this one's very healthy and it has been for the last few years, which is fantastic. Pat mentioned this in the audit report quickly in passing, but this fund has been operating very well. And it's very good because we're going to have some major expenses here in the water fund shortly, and they're planned out. So we've been doing a great job of planning for this fund. But overall, the green line is above the blue, above the orange, and above the gold line there. And that's fantastic news for this water fund. Any questions overall? Okay, moving on to the sewer fund. Same thing, I'm gonna do the same thing here. Yes. Okay, I thought we had a question. Sorry about that. Sewer fund here.
I was just saying not so well compared to our water fund, obviously.
Yes, sewer fund is struggling. So touch base quickly on these revenues and expenditures. Revenues on top there, 1 and 2, they are favorable variances. So we are seeing an increase in sewer revenues. Most of those have to do with the change in rates again. And also the transfer of operations of MRF to the city in 2019 is helping those, charges for services increase. Also the budget for reimbursement from Agripure for our second half bond payment, for that number 2 number, we are favorable with the miscellaneous dollars that we're supposed to receive. We did receive a payment for the first half bond payment from Agripure, and then we have the second half bond payment that comes out in August, which we all know of. That's that $1 million bond payment, and Agripure covers 17.3% of that for our operations. So that goes into miscellaneous dollars, and that's why that number is $257,000. It's most of it comes from Agripure, about $200,000 of that. Otherwise, number 3, 4, and 5, we'll touch base quickly on those. Those are, number 3 is unfavorable, and that mostly has to do with where the time is being spent. Now that we don't have that MRF fund anymore, and we're using the sewer fund as all operations, we are spending more time in that fund than we were last year in 2020 or in 2019. Also, but in the same fact, we had that MRF fund that we were using for expenditures for any MRF time that we were spending. So there wasn't that much time being spent in this specific sewer fund for the city. Most of it was being spent in that MERV puck fund. This should change next year, and we'll have better information and be able to compare apples to apples more year over year for the sewer fund. But that is the reason why the increase is there. Nothing to be alarmed about, but it's just a bigger increase because we're combining two funds into one. Number 4, supplies. Supplies is under. We haven't needed as many supplies this year, which is great. This is a positive. We're going to hope to keep that moving forward in 2020. And number 5, the same thing for the sewer fund that happens in the water fund. We paid for those water meters to go in. Part of that comes out of the sewer fund because it relates to the sewer fund based on water usage. And also that NISC, new utility billing software that we received or went live with in 2020 was paid for out of that fund. Nothing similar in 2019. Same graph on the bottom right of your screen here. Gold on this one is the current expenditures. Green is the bond principal, and then the brown is depreciation. Goal for this fund obviously would be to go over the top of the bar. This is not happening in this fund. It's not quite as pretty as the water fund is. You'd like to see the line above it, but it looks like it's doing much better in 2020. As you can see, that line is right at about the green line, which means we're cash neutral. We aren't making any money because, again, the top bar on that bar graph there is depreciation. It isn't a cash item, but it is something that we need to replace items. We aren't covering our depreciation currently. That was corrected when we tried to cover half the depreciation in 2020. Remember back in when we approved the budget, we also approved the rates for the sewer fund, and we are planning on covering half of depreciation in 2020 based on the information that we have from the system. That is still our goal, and that is what we're hoping for with the sewer rates that were approved for 2020. And then looking forward as well, we'll have to make sure we continue to move forward in that direction for the sewer fund, because it is $900,000 in the hole based on these multiple $1 million payments from the bond principal. But again, it's moving in the right direction. Looks like we're almost ready to cover depreciation or getting right at that line, which is a fantastic thing. And we're moving in the right direction of the sewer fund. Any question on the sewer fund? Go to the next one. We'll go to the electric fund then. The electric fund here, this one's about the same every year typically, but number 1, we'll look at favorable, unfavorable numbers here. The number 1 for revenues, we are under revenues for the year. We did increase our rates to cover rates and cover our numbers that we've set for revenue ratios that we want to have. So we have updated those and been able to reach those revenue ratio numbers that we want. But we're using less power. People are using less power. That's, changing to LED bulbs, not leaving lights on, so on and so forth. So less power is being used in the city, which means less revenue for the city overall. This is just a result of usage. Usage increases, we will have more charges for services. Overall, not concerned about it because we're not paying for as much purchased power as we were in the past year. So if you look at number 4, that's kind of the opposite way. We're at $17,000 difference in purchase power, because purchase power has not been as much because we haven't had to purchase as much with less usage. Number 2 is the other services and charges. That is related to timing of payments. This is typical for Q1 when compared to last year. Last year we had more rebate programs that people were taking advantage of. I'm not sure if it's just because there's not as much people taking advantage of it. I'm not sure if it's just because of this COVID-19 thing. I'm not sure completely, but there haven't been as many people taking advantage of those rebate programs as were in 2019. So we're about $50,000 light on that area. Bond principal, number 3 and number 5 are the same exactly as they were in the electric or the water fund and the sewer fund. Bond principal, again, has to relate to the capital lease that we did not have in 2019, but we paid for on 1/1 of 2020. And capital outlay has to do with the fact that we paid NISC again and are related to the electric meters that we changed out in 2019. So those two are the same, very similar items that happened in the water and the sewer fund, but just different numbers based on usage or numbers of meters that we needed to change out and or lease payments. Electric sales on the far right, we'll look at the graph there. As you can see, we were able to cover, current expenditures are much higher in this fund. We have a lot more expenditures. Bond principal is there. You can just barely see it. It's a gray line. very, very small. As you can see, it's $105,000 for the year, which doesn't add to much on the line when it's a $9 million expenditure line, a bar graph there. So it does make it look very small, but it is still $105,000. And then depreciation is that gold number on top. We are above those lines right now in 2019 or 2020 moving forward. That is a fantastic thing that we're able to increase our cash balance in this fund. We're hoping that continues for the rest of the year with good budget numbers and good staff work. So any questions on the electric fund? Okay, and we'll forward to the community center. Oh, yep.
If you'd be kind enough just to answer your question for me going back to the water fund. I don't know why I forgot to ask you this. I had a note here.
Sure.
This 23% unaccountability that we have for water, is that something we can track at the monthly basis or at the quarterly basis, or is that something we only know at the end of the year? And the reason why I ask that is because we're now 3 months into the fiscal year. Do we have any idea what that number may be and any corrective actions that can be taken so we can get that number closer to the 10% that's been recommended by the Minnesota accounting experts, I guess?
The OSA?
Whatever,
yeah.
whatever it's called. I'm retired military. I could throw acronyms at you too.
Well, it's okay. The Office of the State Auditor is the OSA. And yes, they have the recommendation of being at 90%. We are now able to do that with this new NISC software. However, we have not been able to do it yet. We are only in our 3rd month of doing that. We are planning on working with the wastewater department at the middle of the year in order to run a report and see if we can get exact numbers to get, what we need and, for number of gallons pumped versus what we've built out and see where we're at. I'm going to be able to provide that number at the 2nd quarter report, give that to you guys. It is something we're able to run now. We were not able to do that before in our previous software. So that's something that we're looking forward to. And
Perfect.
we should be able to get that to you.
That answers my question. Thank you, sir.
Yes, thank you. Okay, we'll finish up with the community center fund then if there's no other questions about the other utility funds. This one's pretty quick and easy. 1, 2, and 3. Number 1 is, again, the same revenues and expenditures. We're looking at the income statement here. Charges for services are favorable compared to last year, or I should say, take that back. They are unfavorable for last year. It should be a negative number there because they're actually down $41,000. That has to do with refunds that we had to give out for memberships due to the COVID-19 pandemic. And also community education classes are down. As the city council is aware, but I'm going to make sure that the public is aware as well. We're just a pass through for any community education classes that happen at the community center. Those community education monies come into the city, but they are then cut to the school district for running those programs. So it goes into revenues and then it goes right out of expenditures, and we don't ever see any actual dollars from that. So it is just a pass through, but the decrease in revenues, I need to update that formula in there obviously, but it is a unfavorable variance for the revenues this year. And that has to do with that COVID-19 pandemic memberships. Otherwise, expenditures, number 2, that is a $17,000 favorable variance, and that's an actual favorable variance. That has to do with electric utilities not being open. The community center has cut down on the electric utilities that they're paying. And also, I didn't have as many expenses this year just with miscellaneous items that happen with other services and charges. And also being shut down for half a month helps that as well. Number 3, miscellaneous, we are under again. That has to do with those community education classes that I previously mentioned in number 1. That's the offset of those numbers. It comes to miscellaneous.
Zach,
Bottom right, yes.
Zach and Jasper. As we're on the community center, obviously we're being hit hard from COVID-19. On top of this, are we tracking all costs that are related to the city with COVID-19?
Councilmember Favalis, this is Jasper talking. Yes, we are. So we're anticipating the ability to apply for something, some sort of stimulus, some sort of grant related to COVID-19. We're tracking all this. We're going through actually some grant applications right now as we speak. To potentially go after some federal dollars for things related to basically our capital improvement plan that we've kind of put on hold for the time being until we have our finances fully understood for the year related to revenues. But we haven't yet had anything that's available for the community center, but we do have a good tracking list of what these expenditures are. We're also tracking, the people that we've had to furlough, what that value is, and things like that, so that we can go ahead and hopefully be able to resume operations here. But yeah, we're anticipating some grant or funding stimulus application ability, and we're tracking those items so that we can readily apply.
Do we have an idea as to what that cost is thus far?
I'd have to, like I said, we're in the middle of doing the one grant that we've actually found that we can apply for right now. If taking into capital plans, I know that the number that we basically have said that we were going to postpone these things. So the number is pretty big. It's like $2.5 million so far that we've identified. So, but that's related to economic development and basically the stoppage of projects as well. So it also includes PPE purchases, additional things that we've had to do cleaning wise, that type of thing. But most of that number is related to capital projects that have been put on pause.
Okay, and to be clear too, we still have additional things to do for even getting the parks and stuff ready, because those all have to be disinfected and so on.
Correct. Yep. So we're working on that. There's a webinar on Thursday that I think a bunch of people from staff and maybe city council, if they saw it, from the League of Minnesota Cities, that talks about park and rec, and they'll likely give us some recommendations related to opening up our facilities again.
Okay. Thank you, sir.
Great questions. Thank you so much. Community center revenues, let's touch base quickly on the little bar bar graph, line graph on the far right there. Again, this one just has expenditures. There's no actual, I'm not breaking out bond principal because it's a required payment based on our bond, as we have to make that payment based on revenues dollars. So it comes out of revenue dollars no matter what. And then also looking at revenues, we're trying to get above there, trying to right the ship and trying to get community center to cover their expenditures. Last time we were able to do that is in 2017, as you can see, but they have slowly gone down. Staff is working at remedying this, and as you can see, the green line is basically 3/4 of the way up the blue line in 2020. So it's not covering expenditures at the current moment either. With furloughed employees, that expenditure number for salaries and benefits that you're seeing in that first green line on the left in the income statement should continue to go down with furloughed employees that we don't have because we aren't open. So again, working with staff and such, and with the PBC, we should be able to get something back to city council and soon. So anything else that I can answer with the Q1 financial report? That wraps up my report, at least for now, unless you have other questions.
I wanted to ask Mr. Mayor, if I could, because you've been so involved with the audit, have you had a chance to look through our first quarter for 2020, and are you impressed with what you see, or is there anything that's within your headlights that are alarming at this point? Take away the COVID-19, sir.
Mayor Hank, this is Jasper. I believe Matt has dropped off the presentation, but I will say that Matt has offered to come into personnel and budget committee meetings and give us some advice and talk about what we have going on during the budget process this year. So we'll likely take him up on that to assist us on some things, especially because of COVID-19, and trying to understand what that's going to do for operations and revenues into 2021. But he left the call, but we will bring him in to discuss some of these things with our budget process for 2021.
I think that's a great idea. I think that the more eyes we can get on it, a quarter of the year into it, the better we're going to be for the remainder of our year. Does anybody else have any questions for Director Dowd or City Administrator Krugel regarding agenda item 6 Bravo? If now, entertain a motion to receive and accept the 2020 Q1 financial report for the City of Sueur.
Councilmember Fabulous, so move.
Thank you, sir. Can I get a second, please?
Krogman, second.
Thank you, sir. Any additional discussion? City Administrator Krugel, if you'd be kind enough to go ahead and call roll call to receive and accept the 2020 Q1 financial report for the city of Sueur.
Yes, I will. Councilmember Favelis,
Aye.
Councilmember Huntington,
Aye.
Councilmember Kirby,
Aye.
Councilmember Krogman,
Aye.
Councilmember Schleter,
Aye.
Councilmember Sullivan,
Aye.
and Mayor Hague.
Aye. Thank you so much. And with that, I'll go ahead and entertain a motion to take a 5-minute recess before we move on to item 6. Charlie,
Member
can I get a
Sullivan.
motion for recess, please? Okay, thank you. Can I get a second?
Member Fabulous, second.
Okay, all in favor?
Aye.
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 Okay,
Aye.
5 minutes. Let's be back at 7:45, gentlemen. Thank you. I'll go ahead and entertain a motion to return from our 5-minute recess.
Member
Krogman.
Sullivan's
Sorry.
Sullivan second.
Okay. So just to be clear, that was Councilmember Krogman for the motion and Councilmember Sullivan for the second.
Correct.
Correct.
Okay. All in favor?
Aye.
Aye. Okay, next item on the docket is 6 Charlie Comprehensive Water System Plan. City Administrator Krugel, I hope you're ready to go through all 336 pages. I know we're dying to hear it all.
Yes, no, actually, I'll let the experts talk about this. We have Chad Katzenberger from SEH that's gonna talk about this. And basically, this is something that we've had in our capital improvement plan. It's needed. We needed to do it in our system. And you've already seen some items that we've included in our capital improvement plan. But there are a few others that have been identified that we need to address here. So with that, I'll turn it over to Chad. And Chad, you just kind of give me some cues and I'll advance the slides along.
Welcome, Mr. Katzenberger.
Thank you, Mr. Mayor and Council. Happy to be here. Thanks for the opportunity to present this report and make this presentation. As you noted, the report itself is probably quite lengthy, so I tried to boil it down and give you the high points in this presentation, and I'll try to keep it moving along so we can get through it in a decent time. Basically, this water system plan was put together for a couple different reasons. Number one, the DNR requires municipalities every 10 years to create a water supply plan, an emergency response plan. So part of that was populating a report that's templated by the DNR. And then to a greater extent, we've developed out a new comprehensive water plan for the city that takes a more holistic look at the overall system, what you're going to need for future water supply, treatment, system redundancies, and all those sorts of things so you can better plan in the future. If you want to go next slide. So, what I'd like to review tonight is basically a few things, purpose of the plan, take a look back at historical studies, review your current water use trends, your future water system needs, talk about how we actually came up with those needs through a water model development and construction or analysis, and then most importantly, take a look at what those overall needs look like and what the recommended improvements look like from a future improvement standpoint. Go next slide. So we take a step back, look at lots of data, whatever we can get our hands on, previous studies, all the great data that your city staff collects, and basically bring it all together in an effort to look at the whole water system from a holistic perspective. As we work through that, we're building upon previous plans, previous efforts, and optimizing and really focusing our efforts on how the system should change and what the system should look like to meet your future needs, both from an existing customer viewpoint and to accommodate additional growth. Next slide. We take a look at every aspect of your water system. We start with the supply and treatment. How much water do you need to supply both now and the future to meet your big days? Storage for emergency supply and fire protection. And then, of course, distribution and transfer. How are you going to deliver water to your customers? Where are the weak points? Where are the weak points from a fire protection perspective? Go next slide. Just a quick overview of your water system. Water supplied through four primary wells, two somewhat shallower wells, I should say, that tend to be a little more potentially vulnerable to outside contaminants, and then two deep wells, which are your big producers and are well protected with lots of confining layers, so on and so forth. all 4 pump to your water treatment plant. You can go next slide. And the water quality from your water supply wells is generally good. Then the main issue at hand is levels of iron and manganese in the water, and that's the main purpose of that water treatment plant, is to remove that iron and manganese. We go to next slide. This is just a kind of rehash of that same information, but it gives you an idea of what your water plant is doing, primarily to your iron and manganese in the raw water, what the net result for removal is. The final column on the right notes clear well water quality, so you can see what the water going in looks like from each of the 4 wells, and the great job that the water plant is doing to produce the finished water in the clear well, which eventually makes its way into the distribution system and is delivered to your customers. Yep, you can go next slide. From water storage perspective, of course, the most visible piece of your water system, your water towers. There's, of course, 3 elevated tanks, 1 for each pressure zone, which serve to provide emergency reserve and also sustain system pressures for the various elevations that exist throughout town. And of course, your distribution system, got just over 36 miles of distribution system piping, which of course delivers water to your customers and supports fire protection. And this is just a review of your pressure zones. These are served by each of the 3 water towers, again, really based on land elevation. As you rise in elevation from the river bottom, each water tower that serves a particular area needs to be a little bit higher in elevation in order to support system pressures in those particular areas. So that's really driven by elevation and geography. One booster station exists currently out in your distribution system, and that goal, the primary purpose of that booster station or pump station, is to simply move water from your low pressure zone to your high pressure zone, whereas the other 2 pressure zones, the low and the middle zone, receive water directly from your water treatment plant via the high service pumps. Stepping into historical trends, this really drives what we think may happen in the future in terms of water system demands. If you look at the chart down below, the graphics are a little tough to see, but the black dotted line correlates to city population. You see it's fairly flat, a little bit of rise, and right above that particular line is your average day water use. So that's how much water on a given day is pumped to your system. Again, that tracks very closely with population. And then above that line is max day water use. So that's a single day during a given year of the largest day of water use. So typically that's either driven by high use, like people watering lawns. It could be something like a water main break, or during cold weather if taps have to be left running to keep water service lines thaw. That can vary, but most typically that's driven by seasonal water use. Go next slide. This is a brief look at per capita water use, and this gives us a little bit of idea of how future water use and previous water use is driven by population and by the larger commercial and industrial users. You'll notice that first column shows residential per capita water use, so that's taking water billed through your residential water service meters and dividing it out by the population. And you can kind of see a somewhat downward trend of per capita use, and that's a pretty common thing that we're seeing. Is a general trend down on the residential side. There's a couple of years in there where it blips up, where there was a high amount of water use over the year, so the average is a little bit higher. But generally speaking, your per capita water use is right in line with what we're seeing in other communities in Minnesota and across the country. then the commercial industrial per capita water use gives you a feel for, the breakdown of the residential versus commercial use. Of course, you have some very large users in town who consume the majority of the water. So as we look forward and project things out, the biggest effect on future water use growth is going to really be the industries versus residential use, but we'll account for both. Next slide. This is just a quick breakdown of water use per pressure zone. Notice where your big users are located, the high zone, the low zone. That's where the vast majority of your water is being consumed. The middle zone, largely residential, has the smallest amount of use, and that will come into play as we look at some of the additional system analysis moving forward. Go next slide. Moving on to the water needs analysis. This is a similar breakdown to that graph where you can kind of see graphically where your large users are located. Each of those dots represents an average amount of water use across the distribution system. So you'll see the red and orange dots are the larger users, whereas the lighter blue, darker blue are pretty average, consistent users across the distribution system. Just gives you a little bit of feel for where water needs to go before it's consumed. Next slide. This is a breakdown again of your top 10 water users. This comes out of the DNR water supply plan as well as our comp plan. You can really get a feel that your top 10 users are using almost 75%, almost 3/4 of your overall water sales. So as these large users could potentially change their water use trends or water use processes, they'll have the biggest effect on future water use and future water use growth, or potentially if they implement their own way of conserving water, their use trends could decrease your water sales.
And Mr. Katzenberger, this is Mayor Haig. Question for you in regards to the amount consumed for our 10 largest industrial users. I take it that this information was gathered from our billing system?
Correct. That is correct. Yep.
Okay.
And this is so this would be what was billed out. I believe this was from 2018 is when we processed this.
Yep. Thank you.
No problem. This is just a quick overview of seasonal water use trends. So total water pumped or average day water pumped month by month. And we have a little bit of a seasonal trend in the summer months, people washing cars, watering lawns, those sorts of things. But the extent of your seasonal water use, of course, gets muted or dampened down just by the nature of your large commercial and industrial users who may not necessarily have a difference in water use from summer to winter. Generally speaking, we look at this has somewhat of an effect on your potential max day water use. Go next slide. We take what we learned from the historical water use analysis and population, and now we project that information out so we can get a feel for what we might expect for future water demands, both from an average daily perspective and a max daily perspective. Now this is based on population, and why we do that is we don't have a crystal ball. We don't know what exactly is going to happen in terms of the change in user types, but we need to have a target or have a guideline to shoot by. So we take your overall per capita water use from both the residential commercial perspective and apply that to your future population projections so we can get a good feel of what's a reasonable amount of growth. And that translates to a projected average day water use and a projected max day water use. So we're currently sitting right in the neighborhood of, just north of 1 million gallons a day, average day expected. And then if we look at the max day, this is listed as a potential. This is, what we think on a big day you could potentially have happen. Now, it's not saying it's going to happen, but it has the potential to get there. So we can plan for accommodating those larger demands. So through 2040, we're looking at about a potential for a 500,000 gallon a day growth in average day water use to be accommodated, and then also a similar percentage increase for the max day. It's not as big an increase because your max day to average day ratio isn't severe. It's, again, the demands are muted by your large users. They're not necessarily using a large amount of water in the summer, so it doesn't drive that potential max day up to elevated levels. But this is a place to start when we look at planning out future water facilities. And this will come into play later in our summary, and when we take a look at what sort of facilities do we think we're going to need to accommodate both the current system demands, where you may already be short, and also those projected water system demands through the 2040 planning period.
For you.
Right.
Can you hear me, Mr. Katzenberger?
I can.
Yes, this is Mayor Hagan. I understand that our residential consumers use 25% of the water, so I can figure how you'd be able to use population to try to drive those numbers, through 2040. But what assumptions do you make for our industrial and commercial users? What's the driver
right
for
now,
that? It's not population. It's got to be something to do with growth.
Sure. So we do, account for population because we take a look at essentially what are your big users using right now, and we're going to expect that to be consistent year over year. And then we have to look and say, okay, what's a reasonable amount of growth for overall water use? If we think that future users that come online might have a similar water use profile to who already is present in the system, as they come online, we would expect population to be growing at the same time in order to provide a workforce for those users, so on and so forth. So it's not a perfect way of predicting future commercial use, but it's one tool we have in our tool belt to accommodate, that future commercial growth. It could be that future commercial is flat, but we're going to plan for a reasonable amount. All right. Next slide. This is just a quick breakdown of how does that pan out by our pressure zones, and this really comes into play when we look at things like water storage on a zone-by-zone basis and high service pumping into each pressure zone. Go next slide. So now that we have something to shoot for in terms of potential water system demand, we can now take a look at what are our current needs and what are our projected needs. Our demand-driven things are things like supply and treatment, storage, system pumping. And then we also developed a water system model, which simulates the operation of your entire water system. So we can look at how things are currently performing and also how things may need to change from a supply treatment perspective, storage, system pumping, operations, and of course, the big thing that the model helps with is transmission and distribution and understanding potential weaknesses throughout the distribution grid. We can go on next slide. So, as we developed our distribution and our holistic water system analysis, we developed a computerized water model where we take your existing water system mapping, piping, those sorts of things, bring it into the modeling environment. We go on and do some field testing. We can go on next slide and bring back information throughout your distribution system so we can understand what your system can do in terms of flow performance, pressure performance, and correlate that in the model. Then we simulate those same tests in the model, tweak it, calibrate it, so that we're providing results that indeed match our field results. Next slide. Just one item of note. This is some real data from your distribution system. When we were out doing flow testing and monitoring system pressures and flows, we mounted some pressure loggers, which track system pressure on, record on a minute interval and track it on a multi-reading per second interval. And you'll notice this is kind of an interesting graph. We've got loggers shown in the middle zone versus the low zone. That bottom line, that particular pressure was located at a spot where it was ranging in pressure from 50 to 60 psi. You'll notice the little spikes now and then and the little dips. Oftentimes, water distribution systems, the pressures aren't quiet, so they can fluctuate a little bit up and down. Your water tower will hold pressure closer to the tower. As you get further out in the distribution system, the pressures might get a little bit noisier, and you can have some pressure blips and transients and those sorts of things. But all in all, the middle zone, fairly quiet from a pressure perspective. We've got the line above is the max pressure or the interval. The lower line is the minimum pressure, and then the average. We moved down into the low zone. We had one mounted on the north side of the low zone, one on the south side, and you'll see quite a big variation. Well, where the average pressure is holding fairly consistent on average with the water tower levels, there are moments of spikes and drops, and that's really, consistent with being farther away. The farther you are from an elevated storage facility, you can tend to get these pressure transients or pressure noises throughout your distribution system. And I just bring that to light because that'll come into play when we talk about future system recommendations, system piping changes, to try to quiet some of these pressures down and think about installing improvements that can quiet these pressures down, and these pressure spikes can potentially lead to stress on piping and those sorts of things. So anything we can do to quiet these pressures down would be helpful in the future.
So just to be clear, when we see the noise for each of the individual waves for middle, low, the low zone, north, south, and the middle zone, that noise is what you're referring to, that indicates a potential problem with our pressure, correct?
Correct, yeah. It really reflects, you might not notice at the tap, but those minute pressure changes can kind of ricochet back and forth in your distribution system and cause stress. And they can also be caused by users and those sorts of things.
So as somebody that's not within your field, I see our problem the largest with the low zone south. Is that a correct assumption?
Yes. Mm-hmm.
Okay. Thank you.
Yep. No problem. And I'll have to apologize here. My computer went to sleep on me. I got to see where I'm at on the slideshow here. So once we have the model kind of calibrated, updated, and ready to go, we can run it through various simulations and see where weaknesses might be in the distribution system from a system pressure and fire flow perspective, with various pumps on or off, tanks at different water levels, so on and so forth. This is a simple output of system pressures, so you can get a feel for how those change throughout the distribution system and throughout each pressure zone. And really, that's going to be based on system elevation for the most part. If you want to go next slide. This particular slide might be of maybe interest for those who are concerned with fire protection. This provides an estimate of fire flow that's available at all your hydrants throughout your distribution system, simulated by the model. And this really is going to be an indicator of pipe sizing and distance from supply and storage facilities. And you'll notice that the available fire flow is color-coded in various increments. So anything in the less than 500 range, we're starting to get really concerned. The 500 to 1,000 might be manageable in the residential area. Then once we start getting above 1,000, we're feeling pretty good if we're residential. Some certain commercial and industrial users could potentially, need in the neighborhood of 2,000 to 3,000 gallons a minute, depending on their requirements of their fire protection system, and really this is guided by the ISO, the Insurance Services Office. When they come to town, they'll typically go through and do fire flow testing to try to come up with similar results, and they'll grade your water system based on fire flow ability among other things. But this gives us an idea of where there's some weaknesses in the distribution system, where things could be improved from a pipe size perspective, as well as some redundancy between pressure zones. And that will come into play in our future recommendations, and some of those have already been implemented with the Trunk Highway 112 turnback project in right-sizing some piping along that improvement to bolster the fire flows and provide some redundancy. Let me go next slide. This particular map is a simple water age map, so it gives us an idea of how long does it take from water to get from the source at the water plant to the end users. And this is a simulation over a series of days based on your demand records from your water billing records. Really, this is more of a tool for your water system operators, for them to think about, hey, when we're out flushing, where do we need to maybe flush more often? Where do we need to be considered disinfection and checking for disinfectant residuals? It's really a management tool for them to use, and also for us to think about, again, pipe sizing, looping, redundancy to increase circulation and reduce that residence time of the water in the distribution system. You'll notice a lot of red piping in the middle zone, and that's really a product of that's a lower use water pressure zone. So just the amount of piping versus how much we use is in that zone, it's going to take longer for water to go from A to B, because not that much compared to the other two zones is being consumed.
Right.
We go next slide. So when we look at the modeling, we use it for deficiency analysis, finding weak points in the system, sizing future facilities, and then we can simulate proposed facility operation and make sure that what we're recommending is actually gonna work and provide the benefit that you're looking for before you make the investment. We can test your system as a before and after operation with each improvement. We can go on to next slide. So now we've established some metrics and tools for figuring out where we're at with things. Now we need to see, where are improvements needed, and where might we be short. So the first table here is analysis of your water supply. We want to compare that to your potential max day demand. So if you have a day of large demand, we want to be sure that we can easily meet that demand with your existing facilities. Now we use something called firm capacity when we're doing this analysis. So we're going to be conservative and say, at any given time, one of your wells could go down, either for maintenance, scheduled maintenance, or there could be a mechanical failure. So if one of your wells goes down, are you still going to have enough production capacity to meet your demands? So we assume somewhat conservatively that your biggest producer would be offline. That gives you a firm capacity of about 1.6 million gallons a day. We set that against projected max day demand. Let's say this July, if your largest well were to go down and you had a massive day of water use, your storage might start to get depleted because you can't make up that extra 200 gallons a minute that you're short from your production rate. So this gives us a feel for, hey, are we short already potentially with supply, and what does that shortage look like in the future through 2040. So, right off the bat, we can add to the column of potential recommendations a minimum of one new water supply well to meet future, and current maximum day water demand from a firm capacity perspective. Go on, next slide. Similarly, we've got our water treatment plant, and we need to send our well water through the plant, remove the iron and manganese so you can have a good end product for your customers. And we take a look at what is the true production capacity of that plant? What was it designed for? How is it currently being operated? And just a takeaway from this is, the plant had a previous potential peak max day demand or a peak operation of 2.5 MGD, 2.5 million gallons a day. Currently, the way the plant's operated and functionally, we're tapping out at about 1.6 million gallons a day, or 1,200 gallons a minute. And there's a couple things that could be going on there. One would be, I believe the original plant design was to feed permanganate to address the manganese. Since then, the plant has been operating without the permanganate and operating biologically, which is a good and great way to do things because you reduce your chemical cost, and it's a nice way to treat your water. But currently, the production capacity is limited by the treatment processes in use. There's a question of, okay, how do we get to that larger capacity? Can we reach 2 million gallons a day? Can we reach 2.5 million gallons a day? And part of this, what came out of this was recommending a pilot study to address those future treatment capacity concerns. And we'll get into that a little bit later, but really a pilot study, what that does is we take a step back and look at your treatment process. How is it operating? What is the true work that each treatment step is doing? Look at that from a laboratory testing perspective. And then part and parcel to that is a parallel treatment process where we could potentially bring in a treatment train that would test different treatment processes when compared to what's going on at the plant, and see, if you could potentially, run your filters at a higher flow rate, and what does that do to things? Look at other filter medias that may perform differently, and really get a feel for what your options are specifically at the water treatment plant to expand your capacity. If that's going to require some simple modifications internal to the plant, or add a few treatment processes before or after, kind of answer all those questions, because as we look at future treatment capacity issues, it's typically a lot more economical to expand what you have and restore the capacity that you potentially have in your system versus building a new plant or building a parallel treatment process. So we'll touch on that in a little bit here. Go next slide. Water storage. I think it's probably hasn't been a secret that overall your water system's been short on water storage, and I think there's been lots of discussion for years about potentially adding more storage. We're just verifying that with our calculations through a couple different sizing mechanisms. I won't bore you with the details, but we're looking right now recommended additional storage of 200,000, and then through the 2040 planning period another 400,000. Now, storage tanks, depending on how you build them, they usually come in nominal capacities. So we're recommending a nominal increase of 500,000 gallons. Whether you do that in a new tank, or as we recommend later in the report, decommissioning an existing tank and building an entirely new tank, combining capacities of the one that's removed. We go next slide. And then overall, with the model and other tools, we take a look at other potential system needs. One major takeaway is your high pressure zone redundancy. Currently, that is somewhat handicapped by one supply main through the booster station. If that supply or discharge main goes down under the highway, or any length between the main grid and the high zone, the whole zone's without water supply. So that's a major concern. Similar fashion, not to the same extent maybe, but the middle zone has basically one pipe from the water plant to the distribution system. So taking a look at providing a second level or second layer of supply to that middle zone is an important piece. And then pressure zone system connections. Each pressure zone operates independently pressure-wise, but you can link the two different pressure zones with either a check valve or a pressure reducing valve, so that they can help each other out every once in a while, primarily for fire flow. We've already got one planned in with the Trunk Highway 112 project. That's going to really provide a big benefit in terms of fire flow in both directions, and it's really going to supplement the pipe size upgrades. And then talk a little bit about pressure sustainability, circling back to that the pressure monitoring graphs that I had shown. What are some things you can do to quiet those system pressures down a bit from a storage perspective, hydrodynamic tank, distribution perspective. All right, we can go next slide. So we want to come up with a comprehensive list of options and alternatives, and we could kind of develop alternatives and possibilities until there's no end, but we wanted to limit it down to some realistic possibilities so we can compare apples to apples from a cost perspective and performance perspective. Generally speaking, we've got these alternatives laid out as a group of projects that would be alternative A, or a group of projects that would be alternative B. And in some cases, the recommended improvement would land in both alternatives. In general, alternative A versus alternative B really circles around the option of either providing system redundancy and expanding system capacity at your existing water plant and adding a new well and treatment plant capacity in at your existing facility, or alternative B would be taking a look at an entirely new geography to add 2 new wells up in the high zone and a second water treatment plant. If you do that, that affects how we look at water main redundancy to that high zone, whether or not you need a supply main or another booster station. So we wanted to set those against one another to see what that looks like from a real cost perspective and performance perspective. So right on down the line, I'll quickly kind of review these different alternatives. So in order to address the well supply shortage that we had talked about, we're showing a new well number 8, which would be a deep well to match the 2 newer wells, located within a decent reach of the existing water plant. So we're including some raw water main to deliver the water to the plant, and giving you an idea of what one well looks like. So we're simply adding a redundant water supply source in a known aquifer to an existing plant. Part and parcel, or the alternative to that, would be drilling 2 new wells in the high zone. That comes with a lot of uncertainty, as we don't have any wells in that zone. We don't know what those wells might produce without maybe a test well. So the other piece there would be, we can get the wells up there. If we could get wells up there, then what does the water quality look like? Are we going to need a treatment plant? And based on existing experience of water supply in the area, we're going to presume that you would, and we're going to include a new water plant to serve that as part of alternative B later down in this alternative group. Then we take a look at treatment alternatives. We add a new well. We need to be able to treat that extra capacity as well. We plugged in a kind of maybe a middle number for treatment plant optimization, and that's based on the results of that pilot study that we're showing just before that. depending on what that pilot study might come up with, there might be alternatives and options to do some simple upgrades or media changes, additional treatment processes that are fairly cost effective and are going to give you the additional capacity that you're looking for at that existing water plant. So we compare apples to apples. We've plugged in a number there based on previous project experience for our similar plant optimizations. The next one shows, if you were to simply mirror and mimic the existing treatment plant treatment process, increase your capacity, what does that look like in terms of upgrade on the same site? That one's not given an alternative number, but just gives us a feel for how the other alternatives land in terms of just simply expanding that plant outward. We've got the high zone treatment plant possibilities. We're sizing that initially at a 1 million gallon a day plant, 2 wells so that we have redundancy. Again, that's probably a little bit of a conservative number, but given what we've been seeing for prices lately, that'd be right in the ballpark in terms of what you might expect if you were building a similar plant in your high zone with 2 new wells. And again, that price is independent of the wells, so you're taking on the plant price plus the price for the wells as well. Then moving on to transfer, we've got a high zone redundant waterline service flow booster. Now this is we're trying to resolve that redundancy issue to the high zone. If you decide to expand your capacity in the low and middle zone at the existing water plant, we still have an issue with that line going down to the booster station. If it goes down, the booster station goes down, out of luck for water in that high zone where a lot of use is occurring. So we looked at a couple possibilities there, and the one we settled on was a redundant water line that basically travels on the south side of 169 and meets back up to the distribution system up by Cambria. We're proposing to do that independent of the booster station, existing booster station, so we don't have to cross the highway twice. And in doing that, we would be recommending a smaller scale booster pumping station that would basically serve as a redundant backup. It wouldn't be to the same construction scale or it wouldn't have the same number of features as your existing booster station. It would be simply a redundant backup. So if that line or booster station went down, you could rely on that for a period of time. We've got a redundant supply low to middle zone booster station. Again, that's a reduced scope or scale booster station that if the high service pumps or the line connecting to the middle pressure zone were to go down, you have a way to get water to the users and customers in the middle pressure zone. Probably a lower priority project, but nonetheless, we wanted to make note of that as being a potential need. I've got a high zone booster station generator. Again, this is to support redundancy and redundancy in basically the high pressure zone. If you were to lose power, to keep that booster station going, keep that tank filled. We've got a middle to low zone PRV. That was step one, and that's, I believe, already included in the Trunk Highway 112 project. And then maybe of note is storage options. We laid out a possibility of either decommissioning the existing low zone water tower and building a new 1 million gallon tower to get your added capacity, or adding another elevated storage tank. At the end of the day, it makes, I think, a lot more sense to decommission one and build that extra capacity in a new tank. You would have one less facility to maintain in the future, because that's often the biggest expense with your water storage tanks is painting and maintenance and those sorts of things. And there's some alternatives and options with the 1 million gallon size where you can reduce that future maintenance cost, especially if you're looking at one facility versus two. I've got a note for a potential flushing station, or flushing plan for the middle zone, and that's really to address those water age issues that we had noted for the middle pressure zone. We've got an earmark for system controls, fiber conversion for all your facilities to be more secure and operate on their own fiber optic system. That's earmarked and would potentially be distributed among various projects as they get constructed. So that's not a one-time deal. That would be, a dollar amount that gets divvied up over time to various projects and gets built incrementally along the way. Finally, we've got a
question.
Yes, sir.
On the SCADA, is that with the idea that this would be an add-on to our existing SCADA system, or is that decommissioning the old SCADA and this would be completely new to service not only the new water system that you're talking about, but also our existing water system?
Yeah, so this would address primarily the infrastructure that the SCADA system communicates on. So currently, I believe it's communicating through existing telecommunication companies' lines. This would involve actually installing independent lines for the water system itself.
Okay. So just to make sure I understand, then that's basically covering the entire water distribution system, not just what would be new, but everything.
Correct. Yep, it would link in your existing facilities and link in new facilities that are constructed. Yep. And with the idea that you would, bite that cost off incrementally.
And they would be compatible systems?
Yes. Yes.
Okay.
Mm-hmm.
Okay. Thank you.
No problem. And then moving along the lines, we've got noted a truck fill / hydromatic tank system. This would be potentially located in the low pressure zone. The purpose of this is twofold. One would be to provide an access point to sell more water to outside customers coming with water trucks, automated, those sorts of things. And then gives you an opportunity to put in a hydrodynamic tank. Circling back to the noisy pressure issue, hydrodynamic tank would act like almost like a miniature water tower to dampen those pressure swings. Really have that in there because it's an opportunity to install a facility that might not otherwise be able to be installed. It would look something like a little miniature shed or garage, or with an interface for water sales, and then the building would house the hydrodynamic tank. Not unlike you would see on a residential system, but to a larger scale. And then finally, we've noted just a water main condition assessment, and this, maybe doesn't go to the top of the priority list, but as we look at replacement of future water main, primarily your undersized mains are the ones that are going to get replaced, kind of without question. But as you look at other water main through the distribution system, though there might be some older main, may be in fine shape, and you may not have to replace it when you look at future road reconstructs and those sorts of things. So there's ways to take a look at that from a break history, water main vintage perspective. Then we kind of sum those up and take a look at A versus B, the overall arching question of, do you add new supply wells and treatment to the high zone, or do you optimize and make what you already have in place, expand the capacity of that and optimize it? So that really informs the next slide, where we settle on alternative A, and this is really just a graphical representation of those potential improvements that we're saying, hey, these are what we think make sense. Initially to serve your immediate needs as well as your long-term needs through 2040 in a reasonable amount of water system demand growth. And then go next slide. Taking a look at performance, I alluded to the water model, and what what do you get for an investment? What's your return on investment? So we can take a look at a few different things, the before and after the water system. This is taking in account for water main upgrades and new storage facility and some links between the pressure zones, and we can really see a net result in our fire flow availability, which translates to better flow, better redundancy throughout your distribution system. And I just threw this in there for just a quick example. We could, if you look in the report, there's other simulations that are kind of a before and after sort of comparison between existing system and future system from a hydraulic perspective. And then next slide takes those priority project improvements. So primarily those projects that landed in the A column, and we ordered them or tried to order them in a way that seemed logical in terms of priority, what you might look at tackling first. So that the first one that lands on the table is the PRV station that's, I believe, is already in progress or may even already be bid out on the 112 turnback project. And then the next project I think that really makes sense to pursue is that low zone water tower. Finding a spot for a new 1 million gallon water tower, getting it online, and decommissioning the existing 500 million gallon tower in the low zone. That'll give you extra capacity and reduce your maintenance costs. Newer tank styles, depending on what you go with. If you were to build a 1 million gallon composite tank, half of that tank is concrete, doesn't have any coatings on it. So then you're only maintaining the coatings on the tank portion of the water tower. So that's looking like maybe the first big project to tackle. Parallel to that, we want to start looking at solving the supply and treatment capacity issue. And first step with that would be that treatment plant optimization pilot study I talked about, where really digging quite a bit deeper into the treatment plant process and really understanding how is that water plant performing, what are its weaknesses, what's the useful life left on that filter media, is the filter media the potential bottleneck in that plant, and really determine the sorts of things that you can do to the existing plant to increase your capacity. Then, of course, getting water to the plant, adding water, it would be the addition of well 8. Then we've noted the first phase of those SCADA control fiber conversion, which would be probably done as part of those previously mentioned projects, and then moving into the other priority projects being the booster station generator, which that may actually come sooner than later, and then the treatment plant optimization. So realizing those capacity upgrade increases that are recommended as part of the pilot work. We've got high zone redundant water line and booster station, more fiber conversion, that low to middle zone booster station, and then further on down the line, a truck fill station, hydromatic tank, which that could be driven by demand or need, and other various improvements, including the final phases of the SCADA control conversions and a potential flushing station or UDF flushing plan. Again, that's a fairly comprehensive list of projects over the 20-year planning period. The concentrated projects that are probably of greatest need, land earlier in the list rather than later. We can go to next slide. So if we take a look at that just from a simple, next step perspective, what comes next after we've looked at everything? The first phase would be, I think, water tower planning, taking a look at where are some possible sites and locations for that new low zone water tower. We think it would actually be situated nicely, not too far from the water plant, and very near the existing water tower, there's some connection locations to some larger diameter water main that might facilitate that future water tower construction quite well, given land is already owned by the city. And then pursue funding and figuring out how to fund that, the mechanism that's going to be done. At the same time, that water treatment plant capacity optimization, that's really going to be the roadmap for how you might choose to proceed with your supply treatment question. If we can find a favorable alternative to optimize what you already have, you're going to be able to more economically increase your treatment plant capacity and then justify the addition of that new well, which would be located near the water plant. And part of that work, again, would be, finding the right spot for that new well based on land ownership, potentially seeking out parcels of land already owned by the city not far from the water plant, and that are also far enough away from the other wells that they wouldn't necessarily cause potential interference.
And that would be coming from the Mount Simon aquifer?
Yes.
That would be, okay.
Yep. So I really just wanted to end on this slide and see if you guys had any additional questions. Want to thank Rich, Foster, and Pete for helping out on this. They were instrumental along the way, the whole process of providing input and reviewing our results, and really were helpful as we put this plan together.
Mr. Katzenberger, Greg Haig here again. A couple of questions for you, sir. I noticed by going through some of the slides back in the, I guess it would be the Chapter 2 series, where you're talking about our existing equipment. I see, like, for last maintenance, never cleaned. Could you kind of talk a little bit in regards to what your overall opinion is of the condition of our equipment, and is there preventive maintenance that should have been done that hasn't been done? And my next question would be, you're basically talking about adding at a minimum 650,000 gallons of water capacity to the city of Sueur. That said, how would that fit with our existing waste treatment facility? What modifications would have to be made for that to accommodate that additional potential water, that extra 650,000 to 1 million gallons of water?
Sure. So I can speak what I know to both of those points. So first question about the maintenance. Overall, many of your facilities were in good condition and good shape. There's oftentimes portions of your water treatment plant process that are difficult to maintain, because if you take it down, you basically, the plant is going to be offline for a period of time. So things like aerators don't often get taken out of service very often, unless there's a redundant aerator in place, which isn't all that common. But overall, I think the biggest question we kind of came away with as we looked at the plant is, don't want to get too far into the weeds, but that plant is operating biologically, we call it. So the permanganate's been turned off, and whether that was by design or it just works better that way, we would propose to take a look at that a little more closely and really understand what portions of the treatment plant process are the bottlenecks, and how is that plant really operating biologically? What is each phase of the treatment process doing, and how is it effective? And then think about how to expand the capacity of each of those steps in the treatment process to optimize things. And then the question about adding capacity, supply capacity. Us water guys look at things a little bit differently than the waste guys. So if we look at your average day water use, is a pretty good indicator of how much water is likely going to your waste plant from the city. Now, when we start talking about your peak water day uses, that's really going to be driven by seasonal variation. And oftentimes, those peak water uses aren't actually making it to the sanitary sewer. They're going on lawns for watering, down to the storm sewer for people washing cars, those sorts of things. So really that average increase in average day demand is more likely the driver of your waste plant being affected. And honestly, I'm not sure of where you guys are currently at in terms of wastewater plant capacity, but in terms of where you're going to expect to see the growth, it'll be primarily linked to that average day demand.
Okay. Just to be clear, that $11.4 million figure that you were talking about towards the end there, did that include refurbishment of that 36 miles of pipe that would need to be done? Or is there a separate cost for pipe maintenance that we haven't seen?
Yeah, so I didn't make it to my slides, but in the report itself, we have a table for basically upgrading of your undersized mains, so primarily your 4-inch main and other key 6-inch mains that could be upgraded. I don't have it in front of me, but I think that was in the neighborhood of $1 million worth of piping upgrades.
Okay.
And then for planning purposes, we also have a column for future trunk main expansion. So if you were to start to grow out into some of that undeveloped areas based on future land use, what do those trunk main lengths and eventual costs look like? And I believe that was another close to $1 million again of pipe expansion. And how that gets paid for, I guess, is maybe another question of development versus city upgrade costs and those sorts of things.
Okay. Anybody else on city council would have any questions for Mr. Katzenberger?
Mr. Mayor, this is Councilmember Krogman. I do have one question.
Please.
Mr. Katzenberger, in your plan, I'm thinking of the potential development up in what we commonly call the property up by Wolf Motors near off of 169. How does this information fit with potential development at that site? We don't have anybody online right now to put anything in there, but what would we need? Does this plan in some way account for possibilities, or would development up there change some of this plan?
Great question.
Mm-hmm. Yeah, so we did account for some growth in that high zone. The first thing we wanted to do was bolster your redundancy. So your primary supply capacity through that booster station is plenty large. It's big enough to meet current and future max day demand projections for that high zone. Where we have concern is the redundancy. If that link in the chain goes down, if the booster station goes down, or the suction or discharge main goes down, then not only are your new customers out of water, but your existing customers in the high zone are all out of water. So this plan accounts for that. In addition, one of the routes of our main redundant main goes on the south side of 169, links back up in New Cambria, and that, I guess, additionally to providing redundancy, would provide a locational link for future development.
Okay, thank you.
Anybody else?
So this is Councilmember Fabulous. So charges to the existing commercial customers really should make sure that they're able to cover the cost of the additional things that are needed to keep them up and going.
And I guess, noted to that, I haven't seen, the way your rate structure has been laid out or formulated, but typically that's the way those rate structures are set up was, customers are really billed out based on their use and capacity needs and those sorts of things. So, I think the short answer to that would be, yes, the commercial users would be covering some of that capacity growth just by nature of the fact that they're using more water and generating more revenue, and that's going to require more facilities, so on and so forth.
Okay, thank you.
Anybody else? Well, Mr. Katzenberger, on behalf of the entire City Council of Sueur, we thank you so much for your time and for working with staff to put together a very comprehensive 336-page document, which has been just wonderful reading, by the way. And I know I certainly, it kept my attention for about the 15 hours it took to read it. But thank you so much, sir. Really appreciate it. And I'm sure that we're going to be crossing paths again. And thank you for the kind words in regards to our staff as well. Thank you, sir.
Thank you.
Okay. Director Kachera, question for you, if I may. The question on the waste treatment facility being able to handle any potential additional supply. Do you know off the top of your head what the answer might be on that?
Yes, Mayor Hague. The wastewater plant can accept the additional 600,000 gallons per day. That would bring it, excuse me, up to about 90% of its design capacity. So at
Okay,
that
so
time, we would have to then start looking at expansions.
But if we went with the million-gallon situation, then we'd probably have to be making some modifications to the waste treatment plant, correct?
No, the million-gallon tower is removing the 500,000 gallons. So we are only adding 1/2 million gallon to our system.
Gotcha.
Yes.
Gotcha. Okay. Okay. Well, that's good to know. This is a non-action item, gentlemen. So we'll go ahead and go with what we're asked to do. We're asked to go ahead and participate in the presentation, which we have, review the materials and ask any questions. I would like to go ahead and suggest that when we talk about this again on the 26th, when we adopt the comprehensive water system plan, that if any questions come up after you've had the opportunity to review this document, to please make sure we get them to staff so that staff will be prepared to answer those questions or to be ready to go for the 26th before we bring the motion up for a vote. Fair enough? Okay, with that said, I'm going to go ahead and request another 5-minute recess before we move on to 6 Delta, our 5-year street maintenance plan. So if I can go ahead and get a motion to take a 5-minute recess, please.
So moved, Member Sullivan.
Okay, thank you. Can I get a second, please? Thank you, Councilmember Families. All in favor?
Aye.
Aye. Let's go ahead and reconvene at 9 p.m., gentlemen. Okay, 9 p.m. It'll be about a 6-minute break. Okay, and then we'll have Corey on. Corey Bang Fang will be ready to go ahead and talk 5-year streets maintenance plan. Okay, gentlemen, it's now 9 o'clock. I'll entertain a motion to resume from our recess.
Johnny Fabulous, so moved.
Thank you.
Krogman
Second.
sec.
Thank
Krogman
you,
sec.
sir. Thank you. All in favor?
Aye.
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 City Administrator Krugel, before we move on, one final question in regards to 6 Charlie that I thought about during the recess. I know that we have certain items that are already listed on our CIP. Could you perhaps take that chart that kind of summed up what the A and B options were, identify which of those items are on the CIP for current year and the 4 years out, and make sure that we all get a copy of that, please?
Mayor, hey, this is Jasper. Yeah, I can do that. I think what we can do on the 26th is take our current adopted CIP and throw some of these items in there, indicate which ones have already been in there, and then also make a recommendation as far as how it'll play out, and we'll have the ability to modify that during the 2021 budget process as well.
Thank you, sir. Appreciate that. We now move on to line item 6 Delta, the 5-year street maintenance plan update. City Administrator Krugel.
Mayor Hague, members of City Council, this is I'll say the second piece to the CIP, the 10-year CIP that was presented to City Council probably about a month ago or a month and a half ago now. This is the maintenance piece. What this looks at is a 5-year street maintenance plan. It's hard to plan out any further out than 5 years due to the nature of our streets kind of constantly changing. There's problem areas that pop up almost every year that we think maybe will last a little longer, and there's areas that last a little bit longer than what we anticipate. So a 5-year street plan is perfectly acceptable as far as planning purposes go. This is the piece of the kind of over view of the street planning that we've done. On the next meeting, the 26th, what you'll see is these two things combined, the CIP, like the reconstruct, those types of major projects paired with this 5-year street maintenance plan with a proposed budget. And essentially you'll have the ability to give feedback and potentially adopt this as a plan moving forward, knowing that, things financially are kind of in flux right now, or they may be, we don't know what the future brings, but knowing that we always have the ability to change it as we need to. So with that, this is that last piece of just the maintenance. I have City Engineer Corey Beanfang available to give the presentation.
Engineer
All right, good
Beanfang,
evening, Mr.
welcome,
Mayor.
sir.
No, I appreciate it, Mr. Mayor and Council. So as Jasper alluded to, I think this is our final piece here in relation to the CIP planning that we've been, undertaking here the first quarter of 2020, and is speaking to the maintenance part of the street. So this is meant to be in conjunction with the streets and utilities CIP. There will be some overlap, which I'll speak to in after a street is reconstructed to start that maintenance scene. But primarily this is the roads that are not planned to be reconstructed as part of that street CIP, but are in condition that warrants attention and warrants improvement to further that life. So the plan is based on a 5-year outlook, starting this year in 2020, and then mapping out into year 2025. In the development of this plan and talking with staff, we are really presenting a 2-phased maintenance program, ultimately focusing on a seal coat, but then with the thought process of beginning in the first year phase of a crack route and seal, undertaking that project in late summer, early fall, and it'd be focusing on those cracks that are evident, cleaning those and sealing those. It's a different work scope than the seal coat, and city staff has some opinion that there's benefit in separating those. And then those same streets then would be followed up in a second phase, which would be the subsequent year, And those then would be undergoing with a seal coat. That would be probably in the summer time frame. And in addition to the seal coat, the past year and a half of patching has identified the need to do some spot improvements, some spot repair and patching, primarily focused along the gutter line. And so in this plan, we built in some edge milling and patching to rehabilitate that surface, remove complete failures of the pavement, just to allow and I guess ensure that the longest duration of seal coat possible. And then within this plan, in the figure there, you'll note the local streets that we're planning to maintenance, but also wanted to call light to the county roadways that reside in the city that aren't planned to be reconstructed. And then some areas here, we're also including the roads that will be reconstructed. The county undergoes a seal coat project every other year. This is their off year in 2020, so the next one then would be 2021. And the county's preference is to seal coat roadways within a 2-year window after reconstruction to try to preserve that new pavement life. And so thus, with the turnback project being undergoing right now, we'd be identifying that 2-year window of maintenance within this 5-year plan. So we've got those roads identified. Again, this would be handled by the county, but just I guess calling attention to it that there's the likelihood that those roads would be undergoing maintenance as well in conjunction with our local city streets. So if you don't mind, Jasper, appreciate it. Next slide. Oh, one too many, Jasper. Thank you. So just got each year then broken out in the maps, and I'll go through these relatively quickly, being that they're included in the packet. So we'd be starting then in 2020. We'd be targeting a fall timeframe in this proposal, and it'd be beginning then with that first phase, that crack route and seal. We'd be focusing on the project that just underwent construction here in 2017. North 2nd Street should be, very, very low on cracking, if at all. But South Main Street will experience some, being that was a mill and overlay in nature. And there is some cracking evident there. So to try to, get on top of that in as shortest order possible. And then really beginning our first kind of quadrant or neighborhood of maintenancing, being the Park Lane inner drive area. And so then we have a project total of just short of 15,000 for that initial crack route and seal. Next slide, please. And then here you start to see the development then of really this annual program. So then following up then in 2021, we would undergo a seal coat of the roads that were crack road and sealed the year prior, or that fall prior. And then establishing then the crack route and seal of the next grid or neighborhood of streets. Here still again focusing in that same area, just expanding on that length. And the plan is based on mostly on targeting a total project cost. And really we focused on trying to keep the project gridded consistently in the same areas, but then focusing on a budget amount of around 150,000-160,000 annually as an average. So some years are a little stronger than that, some years are a little lighter, and so that was kind of our focus in building this plan. So here then you see the crack seal and the seal coat, and then that combination of just short of 200,000 then for the cost of 2021. Next slide, please. So then 2022, just a furtherment of this then. So, seal coating the 2021 route and seals, and then again, just continuation, identifying that new project area with the crack route and seals in 2022. And then again, focusing on right around that 200,000, again, this is a little stronger project. Next slide, please. And then we have our 2023, and then this one's a little bit lighter. You can see around that 150,000. Also bringing in then, this would be the CASA 22 corridor. in that year 2023. So that'd be that 2-year window after. This would also be the same year that the county would administer a seal coat project. So just calling attention to that. And then 2024, kind of the same thing. This is a little heavier project. It's an off year for our street CIP and utility. So somewhat strategically planned in the sense that a little stronger year than for maintenance, being that we want to have a full on street and utility project. And the next slide, please, Jasper. And then 2025 is a little lighter year. That would be a year of street and utilities planned. And so just a continuation of that. And then something recognizable on this map in 2025, you would note then the South Main Street, again, just bringing that if that's reconstructed in 2022, then that'd be that 2-year, that 2-year reoccurring project for the county planning piece. And then this would be the final year of the crack route and seals in our plan, and then advancing to 2026, then we'd follow up and catch that then as a seal coat. And then if this program was deemed, to be continued, we would be analyzing and planning for then, obviously the setup for the 2027 seal coat. So the next slide, please, Jasper. So then kind of the power, I guess, of the plan. So over a 5-year total with this plan, the maintenancing plan that's being proposed. And the strategy with maintenancing is to identify streets that have not failed to a condition where it still warrants investment. And it's really finding that opportune time to invest and prolong that pavement life to the greatest extent possible. So it's roads that have solid utilities under them, and roads that aren't failed to a condition where you're wasting or throwing away your money. And so in the development of this plan, that's the roads that we are targeting. The total lengths of streets maintained within this 5-year window then is a little short of 12 miles. And then overall total local city streets, that's encompassing of over half of those would be maintenanced in this 5-year plan. And then really fixating on that average that we talked about, around that 150, 160,000, which we'll expand upon more on the 26th, but that's in conjunction then with the reconstruction, the 10-year streets and utilities plan. It's really focusing then on that budgeted amount annually that we're going to be investing in the utility and street infrastructure, hitting that annual target for budgeting purposes. And then the power of this figure is a combination of the 5-year street maintenance, which is identified all in the dashing, on overlaid then with the 10-year streets and utility CIP identified on the solid line. So then those two combined, taking the 12 miles of maintenance with just short of the 10 miles of street reconstruction, totaling 32 miles, and consisting of over 70% of our street roadway miles receiving either maintenance or reconstruction in the next 10 years. So, and again, this was an informational piece and meant to, I guess, complete the street part of it, the streets and utilities. So showing where we'd be focusing attention and work. And then I guess the power of this figure also would show the areas that we're not going to be, focusing or not planned to receive some sort of attention here in the next 10 years. Again, understandably, things can change, but from the standpoint of identifying priorities and identifying projects, this would be the presentation of where that work would be happening or planned to happen.
Corey, this is Rich. Can I chime in a little bit about the importance of that $160,000 number?
Please.
So in the PMP, the pavement management plan, it was identified around $850,000 annually. So in doing the 10-year street CIP, that total bond payment looks to be about $680,000 to $700,000 annually for the CIP 10-year plan. So that plus this 160 gets us to right around that 850,000 annual dollar mark.
Okay. Are you ready for some questions, Engineer Bingfang?
I sure am, Mr. Mayor.
Okay, question, just to be clear, you said that the South Main Street reconstruct was start in 2022?
That is when it is planned in the 10-year streets and utilities plan, correct?
Okay. Secondly, just again, just to make sure I understood you correctly. So with the identifiable plan that you've laid out here going through the year 2026, we're looking at covering about 12 miles of our existing roads right now, spending about $150,000 to $160,000 a year on the crack and seal program. Is that correct?
Correct.
Then if we were to go ahead and put the next 5 years out beyond the 2026 timeframe, we would in essence be able to handle another 20% on top of the 50% we did in the first 6 years, correct?
I think that, yep, I think that's a correct statement.
So my question would be, the 30% of the roads that have not been identified within this particular plan, although they exist within the PMP, is it safe to assume that those roads are in relatively good shape right now and you don't anticipate any maintenance needed to be done over the next 10 years?
I don't think that's a 100% true statement. I think the idea about this planning, Mr. Mayor, is that we're identifying the greatest priorities and we're planning for those first. And so I think that, the 10-year streets and utilities is speaking to the roads where the condition warrants, attention in the next 10 years, whether that be comes of, pavement deterioration or failing utilities. And then in regards to this maintenancing plan, it's an acknowledgement to the condition of roads that warrant maintenancing now to prolong them beyond a 5 or 10 or 15-year window, hopefully, so that we're getting the maximum use out of them. But defendably, there's some gravel surface roads that aren't identified in either of these plans. So there's some streets that defendably are in good enough condition that don't warrant maintenance or reconstruct. But then there's also some streets that, just from a priority standpoint, debatably need it, but just aren't ranked or costs don't allow for them to be on the plan yet.
Okay, so the 5-year street plan, like the pavement management plan, like the comp plan, these are all living, breathing documents that could basically change depending on what happens from year to year. And I guess what I mean by that is, now with the CSAH 22 project going on, we're seeing some of our city roads that are getting an awful lot of traffic that normally they wouldn't. And I know, of course, that, being one of the responsible parties with this, the CSAH 22 turnback. But a road that may be getting a lot of use in the next couple of years now may not be on the list until 2026, for example. But because of overuse, because of this CSAH 22 project, that could bring that maybe to be done maybe in 2022, 2023, depending on the deterioration that occurs on that roadway. Is that correct?
That is correct.
Okay, perfect. Now I understand. Anybody else have any other questions for our city engineer?
Mayor, this is Newell. I have a
Councilmember?
question. Excuse me. We have 32 miles within the city identified. Does that include the county roads or the county roads outside of that, to be clear?
It does not.
Okay, these are the roads we're responsible for.
Yeah, the 32 miles, to be clear, it does include county roads within the city. But it is only, so the PMP, I think that the technical total in the city limits of roadways is 31.8 in the PMP. And so the 32 miles is both city and county roadways within city limits.
Wouldn't the county be responsible for maintaining county roads?
They are, and the distinction, Newell, is that the 22 miles over the total 32 is for the 10 years. So it's both the 5-year maintenance plan, which is the 12.0 miles listed above on the top of the slide, plus the 10 miles of reconstruction planned. But as you recall, you know, about the first 5 years of the 10-year CIP is focusing actually on county roads. So I'm actually mixing my stats here. The top stat, speaking of the 5-year only, is 12 miles, and that is of approximately 21 miles of city street. The bottom stat is 22 miles of the total 32 miles of the city, both city and county.
Okay,
If
thank
that
you.
makes it clear.
Anybody else? Well, again, we are asked to participate in the presentation, which I believe we have. There's no action required for this item. But we're going to go ahead and revisit this at the May 26th, 2020 City Council meeting to talk not only about this, but also our entire 10-year capital improvement plan. So with that said, I'd like to go ahead and extend thanks on behalf of City Council to Engineer Bengfang. And with that, we will now go ahead and move on to our next agenda item, which is 6 Echo, our 2020 sanitary rehab award contract. City Administrator Krugel.
Mayor Hague, members of the City Council, before you is a project that we've identified as a need to basically maintain our sewer service in a section of town, South Main area. City Engineer Corey Beanfang will give a presentation on this, and what we're looking for is approval to accept a bid or a quote that went out for this project. So with that, Corey, I'll turn it over to you.
All right, I appreciate it, Mr. Krugel. So this is something that was in the CIP that has been approved for 2020, and it's really it's a two-part piece. So I guess I'd like to clarify or introduce that the city is been broken into 4 quadrants, and so annually one of those quadrants is televised. With the intent then of every sanitary pipe within the city is televised every 4 years. And so it was a part of this continuous televising program that the condition of one of the pipes on South Main Street was deemed critical. And that is really what's primarily driving and facilitating the timing of this project. But then that with in conjunction then is the first of an intended ongoing sanitary rehabilitation, kind of consistent with the ideology of the street is that not every pipe is able to be replaced, and definitively not every pipe is necessarily needed to be replaced, but to maximize the length of the sanitary within the city, there are rehabilitation methods that allow for and are able to achieve the greatest life of that utility. So it's a really a 2-part piece here that I'd like to be speaking with. And the first is the short liner, and is the rehabilitation or the immediate repair of a failure on South Main Street. on County Road 36 would be. And it's been identified that the top portion of the sanitary sewer is cracked, and we deem and has the potential in short order to completely fail. So there's a rehabilitation method that's done trenchless, where they're able to access an existing manhole and slip a new piece of pipe within the existing and stabilize that. The method of the short liner isn't deemed to be short in life per se, but understanding the planning and the need for greater improvements on South Main, we're trying to be very mindful of cost and make this repair as efficiently as possible to get the pipe to last until the time of more global replacement. And then additionally, with that short liner project, it's the same contractors and the same style of construction or scope of work than that the sanitary rehabilitation project. That's going to be to rehabilitate pipe that's in deemed acceptable condition. And the primary focus of this rehabilitation is to be addressing the clay sanitary sewer, the VCP pipe. And there's an awful lot of it in the city of Sueur. Structurally, the clay sewer is able to remain in the ground and is actually in good condition. The challenge with clay sanitary is the failure of the joints, and that increases susceptibility to I&I, water that isn't intended to be treated at the wastewater treatment plant. So the rehabilitation method is to install a cured in place pipe that seals up and that clay sanitary sewer, preventing that inflow of I&I. And so we've identified an area. It's actually south of Main Street, and it's a portion of sanitary sewer that resides outside of the roadway, which makes trenchless lining a great candidate for pipe like this, that wouldn't be impacted as part of a street project, and that's difficult to replace, being that it is outside of the roadway. So we've identified a stretch of pipe that maximizes what's been budgeted in the CIP, and to really kind of launch from here with this potential lining program or sanitary rehab. So next slide, please, Jasper. So what we did for 2020 is we direct solicited quotes from reputable lining contractors that specialize in this sort of work, and we received 3 quotes back out of 6 that we seeked. A couple responded back that either project size or just scheduling didn't allow for them to quote, and so we received then the low quote was from HydroClean. They're actually out of Iowa, and the proposal tonight, or the request tonight, then is to move forward with a contract to short line the pipe of deemed critical in nature, and then proceed with that cured in place rehab. And then the intent is that this work would be completed by midsummer to reduce that risk of pipe failure then in South Main. So we have a completion date of end of July as part of this project. And I'd be open for any questions.
Okay, so just to be clear, Engineer Bing Bang, this is Mayor Haig again. The breaks that exist on South Main, that's looks like it's basically over there by Canopy, and the other would go from Mag Street to Catalina Court. Is that correct?
That is correct.
Okay. A little hard to read this. I had to break up my magnifying glass.
No, I understand. There's the maps in the packet should be more informative, Mr. Mayor, as far as the true physical locations and such. But you did observe the project areas correctly.
Right. Perfect. Okay. Anybody got any questions for Engineer Bing Fang? Okay, well, I would then entertain a motion to award a bid of totaling $49,292.22 for the 2020 sanitary sewer rehabilitation project to HydroClean LLC.
Member
Member
Sullivan, so
Favalis.
moved.
Favalis,
Okay,
second.
say that again. Okay, so we
Sullivan.
have Sullivan motion, Favalis second. Okay. Any discussion, gentlemen? City Administrator Krugel, if you'd be kind enough to go ahead and do roll call, please, for the vote. So go ahead and award the bid totaling $49,292.22 for the 2020 sanitary sewer rehabilitation project to HydroClean LLC.
Yes, sir. Councilmember Favalis,
Aye.
Councilmember Huntington,
Aye.
Councilmember Kirby,
Aye.
Councilmember Krogman,
Aye.
Councilmember Schleter,
Aye.
Councilmember Sullivan,
Aye.
and Mayor Hague.
Aye. Thank you, everybody. We'll now go ahead and move on to 6 Foxtrot, which is the Government Capital Corporation lease item approval. City Administrator Krugel.
Yes, Mayor Hague. What you have before you is a payment request form through Capital or Government Capital Corporation for water and electric meter replacement project. We received some additional electric meters that were on kind of back order on hold. So we received those, and this is a payment just to Core and Main for that receiving of those electric meters. So what we're looking for tonight is just a motion to approve the execution of the payment request form to Capital or Government Capital Corporation. I'll entertain any questions.
What is the status of any back ordered meters at this point, City Administrator Krugel?
Public Services Director Kuchera could give you the exact numbers. I know there's a few more out there. This isn't, I don't believe, the final payment or final shipment that we're going to receive. But Rich, do you happen to know what we have left?
Yes, there is 54 electric meters on back order yet, and they are scheduled to ship this month.
Ship May 2020. Okay, so we're all 100% up to, we got all of our water meters in, correct?
Correct, Mayor. We have all the water meters. They are not installed. We are down to 10 or 11. I can't remember the exact number, but there is 10 or 11 left to replace. We have snowbirds. We had one come back today, one come back last week that contacted us. So we're getting people that are coming back to their houses and getting them as they come home.
Okay, and of the 54 electrical meters that are back ordered that we're going to receive later this month, are there any other meters, electrical meters within town that we have not installed as of yet, or is it the same type of thing where we're waiting for snowbirds?
The electric department has about 180 meters on hand to start installing. Zach Dowd, finance director, was working on how to put those into our billing system, and we got those put in last week. I got the files from Census, so Mr. Dowd could put the meters into our billing system last week, and now staff can start installing those meters.
Thank you. Anybody else have any questions for either Mr. Kuchera or City Administrator Krugel? Hearing none, I'll entertain a motion to approve the execution of the payment request forms attached to this agenda item for these funds of $14,615 to be dispersed to the vendor from Governmental Capital Corporation for Core and Main LP.
This is Krogman, so move.
Thank you, sir.
Sullivan, second.
Thank you, sir. Any additional discussion? Hearing none, if City Administrator Krug will be kind enough to go ahead and call the vote for dispersing the $14,615 to the vendor Governmental Capital Corporation for Core and Main LP.
Yes, sir. Councilmember Favolis,
Aye.
Councilmember Huntington,
Aye.
Councilmember Kirby,
Aye.
Councilmember Krogman,
Aye.
Councilmember Schleter,
Aye.
Councilmember Sullivan,
Aye.
and Mayor Hague.
Aye. Well, thank you, gentlemen. We have completed our agenda for tonight. We're now ready to move on to our comments, reports, and items of appreciation. And with that said, why don't we go ahead and start off with, let's go ahead and go backwards this time. Let's go ahead and start with Councilmember Sullivan, please.
All right. So all I have this week is we did have an RPAC meeting. We talked about the new software. They are working with that. Appears things are going well with that. They're just finishing up the training and setting it up. The wall project at the community center is almost complete as well. From the pictures I've seen of it, it looks very nice. They are working on a phase 1 opening plan. When and if that time comes with this COVID situations. The other thing we did talk about at the meeting was a recommendation on the outdoor pool as to what we do with it moving forward this year. I think the recommendation should be probably coming to council at some point. Jasper can maybe touch on that, but I believe the recommendation out of RPAC was to keep it closed until after the 4th of July weekend. So I think that'll be coming to council at some point. The only other thing I have tonight is starting this past Sunday, it is Law Enforcement Appreciation Week. So I would like to reach out and say thank you to all of our local police officers for serving our communities.
Thank you, sir. Councilmember Sueur.
I have nothing additional to report this week.
Okay, thank you, sir. Okay, Councilmember Krogman.
Yes, Mr. Mayor, I only have a couple of things with regard to MMPA. Believe it or not, the turbine out in the country is now working. We did have a complaint about sound. I can let Jasper address that. It appears to be resolved. We had the maintenance people come out, but it's working for whatever that means. The other thing is that the annual meeting that's held in the summer, where the annual report is given, it's kind of a celebration of the year and the accomplishments of MMPA. That has been canceled as a regular meeting. That is a person-to-person. It will be done virtually because of COVID. That's all I have.
Okay, just to be clear, that's the same meeting that I attended with you last year?
That's correct. It's the one held in the summer. Staff people are invited, council members are invited. There will be an annual report that will be published and be available both in hard copy and online, and there'll be some kind of a virtual presentation of that.
Thank you so much, sir. Councilmember Kirby.
Yeah, I don't have much. I probably got more of a question for Mayor Hague and Administrator Krugel. Have you heard any new news on the Memorial Day observances? Have you gotten any new updates on that?
Personally, I have not, Councilmember Kirby. City Administrator Krugel, perhaps you have something?
Yes, I do. So I'm working with some representatives to try and do something remotely. There was some questions asked to the county health board, just if what we can do or what can happen as far as it goes. We're looking to possibly live stream an event. We're going to be doing some testing this week on some of our AV equipment to see if we can actually do it. So there are some plans. We're working through those, and hopefully we can have something, if not, available for people to view in person. We'll be able to do it online through some of our streaming services.
when will you have that information so we can make sure the public knows about it?
Yeah, I think to look at my calendar, I think it's either Thursday or Friday of this week is when we're going to test it. And I think before then we should know, and I would think that they would post something on Facebook and then through their other means if there's going to be a service or not. So if I find out something, I'll make sure we post something right away.
Okay, and Councilmember Kirby, I believe you said you had something else too?
No, that's all, Mayor Hague. Thank you very much.
Okay. Okay, Councilmember Huntington.
We have a MRVT meeting tomorrow at 2:30, and that's all I have.
Okay. Now, just to be clear on the MRVT, everybody's riding for free right now because of the COVID?
That is correct, till August 31st. Tomorrow's our
Oh,
regular meeting. That was our special meeting I reported on last time.
Right, okay. Okay, Councilmember Favalis.
I really don't have anything. I really don't have anything.
Okay. And I too do not have anything other than the fact that, again, it's very much appreciated of all of our citizens and our businesses here in the Sueur to be mindful of what's going on with the COVID-19. Please pay attention to the updates. We're expecting an update from the governor here. I'm guessing probably towards the end of this week. And we all would like to see everything open as fast as we can. Of course, we all realize we've got to go through this gating criteria once we get the green light. So it may be a while for some of the businesses, but hopefully it's not going to be too long and we can get everything back on par. Let's hope that's the case. Director Lawrence, did you have anything?
No, sir. Thank you.
Okay. Director Kara?
Thank you, Mayor. I just wanted to give a big thank you to all the public services people that are working through this, working on the CASA 22 project. I know it's a difficult time to work, and I just wanted to send a big thank you out to all of them.
Yeah, that's echoed by, I think, everybody on the entire city council as well, Director Kuchera. They're doing yeoman's work. The project's moving along very good, and thank you for everything that you guys are doing. Well, City Administrator Krugel, if you'd like to be the hammer tonight, sir.
Yes, I'll be quick. I can touch on the turbine a little bit. There was an issue with the baffles or something that made some extra noise out there when they actually did turn it on, and they did go out and they were very responsive. So we're thankful for that. But they did make some changes to it, I believe, and then now it's not as loud. So, but it is functioning right now. RPAC did make some recommendations related to the pool, and it was after July 1st to open the pool or keep it closed until then. We are looking at some financial considerations with the community center at the personnel and budget committee level. We'll likely have some recommendations or at least a path forward from city council or from the personnel and budget to city council at the next meeting. So look for that. That affects the community center as well, and basically all of those recreation type functions that we've had to have closed since what was it, March 17th. So a lot of our membership revenues, basically all of our membership revenues, all of our programming revenues have all halted. So we're trying to project some numbers into the future for the rest of the year so we can be financially responsible with the facility. But there will be a discussion point about that here coming up in the 26th. And yeah, the construction that's going on is going very well. I want to thank everybody that's in the area and all the people who have detours going by their houses. Obviously, it's a change, but it's something that's needed in the community. Those roads are in rough shape, and really what we're trying to do is communicate the best we can with everybody. We fielded a lot of complaints about people not stopping at stop signs, people speeding. Our police force has adapted to that, and they've increased some patrols in those areas that those detours are going. We're going to be really using our speed trailer quite a bit, moving it between Kingsway and 4th Street and South Main and all the kind of problem areas that we see right now, and really kind of follow those detours around. We've also put in for a grant for an additional speed trailer so that we can have a kind of a rotation, couple of them in the community at once, and put them in areas that are of concern. So we're looking at all these things. We're trying to adapt to the various changes that we see with these projects, but really we're in it for the long haul. We have we'll have three good solid years of road construction like this going on every summer. So bear with us, communicate. We're going to do our best to communicate with the public. So if you have any concerns, feel free. Anybody can reach out to me directly, and I'd like to hear them if there are, because we want to make this go as smoothly as possible for the next few years. That's all I have.
The Personnel and Budget Committee meeting is scheduled for May 18th at 3 p.m. Is that correct?
That is correct.
Okay. Anybody else have anything? I'll entertain a motion for adjournment.
This is Huntington, and I so move.
Thank you, sir.
Second by Sullivan.
Thank you, sir. All in favor?
Aye.
Everybody have a great week, and please be safe out there. And Administrator Krugel, you and I will chat, I guess, in regards to Mr. Wilson, and once you get a date set up with him, and we'll go from there. Fair enough?
Very good.
Okay, thank you, everybody. Have a great evening.
You too.
Great meeting, Jasper.